Good morning, everybody, and welcome to day 3 of our Plug and Play Summer Summit, our Insurtech Expo. If we haven't had the chance to meet before, my name is Rachel Sapienza, and I'm the program manager for the Insurtech program here in Silicon Valley. We're so excited to host you this morning. We have a wonderful day of content ahead for you. Over the last 3 months, our batch 10 startups have put in an incredible amount of work scaling operations and partnerships, and I know they're thrilled to share their product and business updates with you today. Though Summit is a culmination of weeks of work, summer heating up means we're only just getting started. On July 8th, we'll host our Anchor Advisory Session. This is an exclusive Anchors-only session where our Ventures team will present top trend reports on the horizon, and we'll discuss what's next for our future programs and what you'd all like to see. From there, we're heading back to sourcing and back to the drawing board, sharing our fall top 150 list with our partners to welcome our incoming cohort for the fall in the final weeks of August. And we hope to welcome you back for some on-site networking and events soon. But to kick things off today, we're so excited to present to you this morning's Fireside Chat featuring our guest speaker today, Nigel Walsh. Nigel is the Managing Director of Insurance at Google Cloud. Prior to Google, Nigel was a partner at Deloitte Digital, where he drove the firm's insurance practice. And today, Nigel leads teams at Google in leveraging the most innovative technologies across claims and underwriting, AI, and machine learning. He's a widely published author, contributing to a number of insurance and technology books, including the Insurtech book and the AI books. He's also co-authored a report from the sharing economy and the opportunity for insurers in the sharing economy for Lloyd's of London. And if you're behind on your reading just a bit in the pandemic, you've definitely heard him talking about the insurance world as the co-host of the Insurtech Insiders podcast. And we're thrilled to have Nigel here today with us. But of course, leading the conversation with Nigel is our very own Saeed Amidi, CEO of Plug and Play. Saeed has been our fearless leader since 2006, leading over 15 years of experience supporting startups and corporations and scaling operations, investments, and partnerships. In that time, he's led Plug and Play in thousands of innovation programs in new locations over 5 continents. So please welcome Saeed and Nigel, and invite you both to turn your cameras on and get us underway.
I'm banned from doing it because of the moderator, I'm afraid. There we go.
Yeah.
Magic, it all works.
Okay, hi. Can you guys see me as well? Perfect. Hi, Nigel, how are you?
I'm fantastic, thank you. How are you?
Wonderful. Where do we find you? Are you in UK?
I am in London on the hottest day of the year. It's currently about like 82, 83 degrees. So I've just changed into a Google t-shirt just for your benefit.
Thank you so much. Thank you so much. As you may know, I had a very early start with Google. You know, Google was in our building 165 University Avenue from when they were 3 people till they were about 50 people. And I cannot believe what a great company it has become. And it's incredible how they have changed everybody's life and, you know, organized the world information. But before getting to Google, Nigel, I would love to know a little bit about yourself, little bit about, you know, what was the journey to, you know, to finally join Google Insurance and Google Cloud for insurance.
I'd love to. I will make you laugh. Although I think my wife, when I said to her I was going to join Google, we were looking at the opportunity together. She said, "Finally, you've joined a company I've actually heard of," and it made me laugh. Followed by, and I'm sure many other people's partners will say the same thing. P.S. I still have no clue what you do. So I'm sure we all go through that with our respective partners. As a little background to Desiree's point, I've been here just a couple of months. I'm delighted to be here. It's an amazing company on the outside looking in. It is an awesome company on the inside looking back out, with so much opportunity and so many great people. Prior to this, as I say, I spent 5 years at Deloitte, where I led Global Future of Insurance. I co-led Global Insurtech. I actually got a nickname as the non-insurance insurance guy in some instances. I helped non-insurance organizations build insurance businesses from scratch. And that was great fun when you bring the capability of audit and regulation, tax, consulting, technology, all together to help retailers, automotive providers, banks design, build, and launch their proposition. That was just outstanding. And it's a stark reminder that the barrier to entry for fintech or insurtech is constantly dropping. And we've seen this over the last couple of years. I've been monitoring the market and engaged in the market for quite some time now, and seeing the number of startups. What are we at now? 5,000 plus insurtech startups. Some are enabling, where they're helping existing incumbent insurers. Some have gone all out and said, we're going to go do it differently in the market, and we think we can do it smarter or better. And I think we've seen each of those evolve over the years, whether it's the technology getting better, whether it's the partnerships with the incumbents, whether it's the partnerships with the reinsurers, for example, all the way through to go, I'm actually going to be an MGA or an MGU, or I'm actually going to go and be a full stack carrier. So it's been really interesting to see the last 5 years evolve as the insurtechs have got bigger and bigger. I actually felt last week, or week before last, we reached one of those moments that said, change happens slowly, then all of a sudden. And you just had to look at folks like WeFox, WeJoe, bought by many, that all did some significant and material second, third, or fourth raise rounds at very material valuations. So that to me was almost we truly are here, the force to be reckoned with. And then prior to that, I was Capgemini, where I worked with some strategic partners, including Guidewire and Salesforce and many others, helping insurers put in more modern platforms, replacing legacy mainframe and so much more. And then I'll pause there. I'm not going to go any further back, but I've always been in and around technology. My personal mission always makes people laugh, and I'm sure many of us on this Zoom are in the same boat. But my mission truly is, how do we make insurance lovable? And people always smile and laugh about that. Go, what do you mean, Nigel? Why don't we make it lovable? No one loves insurance. And our ambition, should each and every one of us, is to change that. And I think the insurtech community did an amazing job in getting us to a point where we can actually engage, interact, think about insurance in very different ways.
Wonderful. Everyone knows that Google Cloud and Google company in general has incredible capabilities, technology capabilities, AI capabilities. How does Google intends to help either the older insurance companies, or can also insurtech companies seek your help?
Yeah, it's a great question. And the answer is we do both. And there's a really good way of looking at it. If you look at some of the things that the companies announced over the last couple of years, they're all public. You can see them on the Google Cloud website. One of them is our partnership with Munich Re and Allianz Global Corporate and Specialty. And that's with the Google Cloud product to help on cyber risk. So again, super interesting area, hot topic for everyone. We refer to it as the risk protection program, led by a wonderful individual called Monica Shokrai, and many others. It's a great team, great opportunity. But that's again about a partnership between Google Cloud and the insurance industry. You look to the work that was done in the UK with the Brits team launching the first automated follow syndicate called Key. And again, a great example of where Google's Octo team, so Office of the CTO, came together with the account teams in the UK to build, design, and launch with Matthew James, and many others. Again, another fantastic partnership, leveraging our capability and technology, but to accelerate and enable the insurance industry. So that's a brand new startup as opposed to a traditional incumbent. And then, of course, there's many other startups out there that we're all familiar with that are leveraging our insights, our capability, our cloud by default, where it really is, a Google first approach, where they go to the design and build and use all the things we've got, whether it's around document ingestion, whether it's around contact center or dialogue flow, or all the good things that are around there. But our capability and tools are so easy to access and get started on. We see lots of organizations of every shape and size engaging with us, and of course, many of those companies start in small complexes. To your point, right? We all start out as a small number of people and we move on at 50 or whatever else we do. But they eventually grow into these large organizations that, should they be successful, we were there at the very outset.
Wonderful. I was involved very early days with N26 when Valentino and Maximilian came to Berlin and built one of the new banks and neobanks. And then I was kind of surprised when Allianz put in $100 million in N26. And from what I know, Revolut in your neighborhood, Chop get involved. Do you think like fintech, banking, and insurance are kind of, at least on the technology side, merging in some ways?
I'm not sure merging is the word I'd use, but I know what you mean. I think if you step out of it and look in from a customer lens back into the journey, again, I'll get laughed at again, but I talk about this whole concept of we have all the ingredients, but we just want cake. Let me explain it. We don't walk into a coffee shop anywhere in the world and say, hey, I'd like some blueberries, a muffin cake, some flour, eggs, and something else. We walk in and we say, can I have a blueberry muffin? And if you think about the journey a customer goes on, let's start in insurance, then build out. In insurance, we have amazing innovation in silos. So there's great things going on in auto. There's great things going on in home. There's great things going on in life and retirement and health and so many others. But there's silos. How do we start to think about us as customers? Back to my point about lovable, do we wake up in the morning and go, I'd love to buy car insurance? Or do we wake up in the morning and go, I want to drive from A to B to see Saeed, my good friend? Right? So you have to work out, in my mind, how we address what the value-added service or the thing that we wanted in the first place is. And if we can address that, and this is where we now move into the world of embedded or invisible finance, which people talk about a lot, and there's some really good examples. There's a good blog on the Google Cloud site from my colleagues in Europe. But the whole concept of embedded finance, embedded insurance, starts to merge, to your words, how these experiences matter. The Revolut Chubb example is a great example. I'm a big fan of the Chubb studio, what the team have done. They've in essence taken a traditional insurance organization, used APIs and capabilities to integrate, and then plug that into a service that owns distribution. Take that thinking and mindset, whether it's N26, whether it's Starling, Monzo, any of these neobanks or neo insurers, and say, actually, the thing the customer wants is to buy a house. Well, why aren't we plugging our capabilities for mortgages, for loans, for insurance into that capability? Same for auto. If I'm going to buy a car, why isn't everything included all in one thing and I have a single transaction? Now, of course, we have to be cautious of regulation and we have to make sure we're following what we need and what the needs and wants are for the client. But I do firmly believe that the business model, i.e. let's move away from annual to more utility-based, especially if you start to think about ownership of assets like cars and houses and whatever else, as that changes, insurance has to change, finance has to change to meet those expectations too.
Yeah, in fact, I hear so much advertising from Geico or some of the large insurance company trying to bundle insurance. And as you said, finally, you have to meet the customer's needs. And I feel this neobanks that have generally a younger, customer base, then later on, they would love to add different product and services to their offering. And what is going to happen to the traditional insurance companies? If I can share with you, like Caixa Bank in Spain, which is in Spain, they are actually larger than Santander and BBVA. They have a mobile product called Imagine, which is for all practical purposes like a neobank. How do you think like the insurance companies are going to compete with the this new insurtech companies that sell you insurance within 3 minutes, or much less friction than every other insurance that I have purchased.
Yeah, let's not forget, and I do remind myself of this sometimes, and I remind my customers of this sometimes, not all friction is bad. So in many cases, we want frictionless because we want it as soon, as seamless and invisible as possible. But imagine a situation where you're in an auto crash, God forbid, and there's bodily injury or someone's been injured, and it's a complicated situation. At that moment in time, we don't necessarily just want a bot. We might want the ability to speak to someone and share the empathy or whatever else. Now, if no one was injured, we're working with USAA, and again, as a public case study where you can take a picture of the accident and go through your estimation process really, really quickly. So we have to apply context to all of these things to work out when the right time is for friction and frictionless. Without a doubt, I think we have to move more to the frictionless piece, but where it matters most. For the traditional or more incumbent carriers and brokers and agents out there, we have to work out whether our journey is one of evolution or one of revolution. And for me, the evolution is how do we just get better and better? And we need to take out some cost. And I've not met a single insurance organization over the last 10, 15 years that hasn't said we're not spending enough money, let's spend more money on our cost of acquisition or cost of service. We're always trying to reduce those to make sure we can satisfy shareholders or the organization, and importantly, get the right price for our client. Now, that said, we need to work out whether we can keep going in 1, 2, 5%, or actually we need to think forward. And if you look at what the Insurtech community have done, or the fintech community, they've stepped forward a stage and said, actually, if we're going to redesign this from scratch with zero technical legacy debt, zero operational debt, zero human capital debt from a legacy mindset or legacy capability and property and premises, then we have that advantage. But again, equally, I think I've seen most of the insurance carriers I've worked with over the years genuinely make leaps and bounds, some more than others, about how they're going to address this new paradigm of customer. Because frankly, I'm not going to admit it publicly, but you and I are getting older. And the next generation, I've got young kids, I've got a 12-year-old and an 8-year-old. I worry if my 8-year-old will even ever learn to drive. And if that's the case, what are we going to sell them? Well, how are we going to engage? What are we going to do? If they come in through a ride share or whatever else, or maybe it's even e-scooter or whatever it might be, is the insurance embedded into that, and do I even need to worry about it? Does the insurance company today of the future even need to do distribution? Now, of course, in the next 3 or 5 years, of course we'll need to do distribution. But jump forward 10 years or 15 years or 20 years. Is the insurance company of the future a TPA? Are we an outstanding organization that does regulated services really well across MTA, claim, and everything else? And distribution is done because it's embedded and plugged into the asset itself. And I think organizations like Chubb, to your comment, do a great job of getting themselves ready for this going forward. And many others are doing it as well. We've seen lots of good examples of organizations across the world either spinning out an innovation division, spinning out a new business from scratch, leveraging the best of the old world and some of the new world. So I work with the folks at Poncho in Australia. So Phil Wilson Brown and the team did a wonderful job of Poncho. And again, that won the Celent in Model Insurer of the Year award last year, I believe. And again, a great example of leveraging some of the old world, installing some Insurtech, in this instance, Socotra, and working out what you do to create great customer experiences.
Wonderful. Again, I don't know if you have been to Munich, where Munich Re and Allianz are, I believe, almost across the street from each other. And from what I remember them telling me is at one time they were together, but to reduce the risk, the government or the regulation had them separate. Do you see like this collaboration with Insurtechs working with traditional insurance company, and of course with reinsurance company, increase and make the whole product development cycle faster?
Yeah, I think the friction, again, using your previous word, between the insurance value chain, right from source of capital through to customer, is really interesting. And if we look at business model disruption over the coming years, just generically, you've got to work out, is there a cheaper way to go from, or a more efficient way to go from risk mitigation and management through to applying that to the end customer? And I think you've seen over the last couple of years some great examples from Munich Re with digital partners, Swiss Re, they created obviously iptiQ and so many more. There's so many good examples of the reinsurance community enabling startups, almost jumping ship from primary carrier and just going, well, go straight to new distribution channels. And I love that. That creates opportunity for us to go, how would this be, or how could, or how would this be different? So I think the collaboration there is really interesting. But equally, let's not forget that the folks that traditionally own the customers, whether it's agents, brokers, or the primary carrier themselves, the ability to still partner with these new modern, hey, we've spotted a gap in the market, we think we can address it differently. We shouldn't underestimate the power of collaboration. And for an industry that's built on collaboration, just look at the word underwriting itself. And if you're lucky enough to walk around Lloyd's of London, and you'll see people walk around with physical slips where they are truly sharing the risk and underwriting it from one to another, actually that whole concept of collaboration is what the insurance business is built on. We just need to make sure we make it efficient and we take out the steps that matter less and make sure we keep the ones that are imperative to serving the client and meeting their needs going forward.
Yeah, in fact, I really have enjoyed visiting Lloyd's of London, and sometimes they have this book that they write like every ship that has had an accident or didn't make it to the port, and they ring a bell, and it was very incredible traditions. May I ask, like this COVID-19 really accelerated e-commerce and also working remotely, and especially like getting product delivered to your home. It's really was for a while not good to have. It was like the only way people would get groceries or food, or DoorDash, like restaurant food coming home. Did you see the same sort of acceleration in insurance business, purchasing different types of insurance strictly online rather than meeting the agent or having a dialogue with the agent?
Yeah, it's an interesting one. I think if you asked us before the pandemic, you asked anyone in the community, whether they're in the US or Europe or UK or wherever, if you said to friends of mine in London, could you move the entire industry home overnight and still function without dropping a heartbeat? We'd have all laughed and said there's absolutely no way. I don't believe this sort of scenario was in anyone's worst case scenario. I mean, people looked at a building being damaged or not being able to access, or a flood or whatever it might be, but no one ever expected us to have to move everyone home. So I think if you look inside the organization, I'm truly inspired by how every organization, insurance specifically, managed to continue to operate efficiently and effectively. I joke about sometimes at one point, we're not sure if toilet rolls were more valuable or laptops, because frankly, if you've got 6,000 people in the contact center, they're not geared up today with laptops, whatever else. They're geared up with terminals and telephony and whatever. So getting people home and effective and working was no mean feat, and we should truly be proud of what we've achieved. But I also talk about a concept of digital indigestion. And what I mean by this is, I feel we accelerated everything on the existing plan because we didn't have a choice. Everyone's got a plan. And we just went through that at pace. So it was a true accelerant. In some cases, of course, we had to apply a sticky back plaster or a Band-Aid to go, let's make these things work because we want to service our clients, our agents, our brokers, and our customers. In the ideal world, we have had a pause and looked at what we could have transformed. So I think this indigestion moment for insurers now, and carriers and brokers alike, is how do we take what we've done and apply our transformation lens to go, what do we need to move back? What do we need to remove entirely? And how will we do it if we have a blank sheet of paper? So there's a level of indigestion that's going to take place as we just pause, reflect, and work out what the new things look like. Because I don't think anyone wants it to go back to the way it was. There's so many benefits and things that we've learned. It accelerated many digital initiatives. It accelerated adoption, to your point, of many digital channels. You just look at the number of placements through Lloyd's that showed over the year that where there is no other choice, it's the only choice. So, it goes back to the point earlier. Often when there's too much choice for us as individuals, we get stuck and we bounce around. But often, actually, by removing options, it might be the best option. And I say that as an individual, that if I'm given 10 things to do, I'll ponder over all 10. If I'm given 2 things to do, I can only ponder over 2. So sometimes it needs to be constrained for us to move forward. And that might apply itself in telephony or chatbot or contact center or physical distribution. So I truly think it was a great accelerant. Now is our opportunity to go accelerant, transform, and then work out what the new norm is. Otherwise, we're going to end up back where we were and actually waste all the hard work, blood, sweat, and tears that people have put in to get us to this point now.
Yeah, we sort of present open collaboration, between reinsurance, insurance companies, and Insurtech and AI technology. We kind of say if everybody communicates well together and collaborates well together, a new technology can be implemented faster, better, and hopefully cheaper. How do you feel Google can play a role in this journey of improving the product, reducing costs, and improving customer experience?
Yeah, I mean, it's a wonderful question. You look at the size and the scale of the organization in terms of, what we can learn inside Google Cloud from what the bigger organization does. And you just have to look online. There's 9+ products that have 1 billion active users. So the sheer scale and capability is truly inspiring. Our approach to the world and our goal here is to enable it, as I mentioned earlier with the case studies. So how do we enable it with not just pure compute, because there's plenty of organizations that just do cloud compute and we all do it very, very well. And actually, in most cases, back to your point about collaboration, we see people spreading their workloads across multiple environments because actually, back to insurance, we are a risk management organization at heart where we want to spread the risk of different things and different capabilities. Now, some organizations are better at one thing than others. Our area of specialty is around AI and machine learning, which is ideal for an industry that manufactures nothing but data. So when you think about what we do in the insurance world and our core competence, when you bring in, whether it's geospatial, whether you bring in our capability to process at speed and scale, and the reach that we've got, you add all those things together, you get an ideal mix for actually how insurance organizations globally are now partnering with us to do either point pieces or do end-to-end transformation to take out cost, but more importantly, to your point, actually be better for customers. How do we engage going forward? Because if it's purely a cost conversation, it often becomes a race to zero. And I think all insurers are equally tired of the, hey, it's cheaper over here or cheaper over there. We want to try based on outcome, value, and business benefit.
Wonderful. I was going to ask you for any closing remarks, but I think your last comment was incredible closing remarks. But it's really, really great. And it's wonderful having you with us in our summer summit. It's, as you might have heard earlier, we are on our 10th batch, which means we've been doing this for 5 years. And I believe we have more than 150 investments in financial services, business, fintech, and insurtech. And again, it's great having a company like Google, join this platform with all our insurance partner and startup partner. Any closing remarks on your side?
I really appreciate the opportunity. I think the words plug and play are synonymous with what innovation and Insurtech has been. It has been for many years. Your role in the ecosystem and being part of the community has been something I've been very aware of from the early days at Deloitte and elsewhere. So delighted to join you. You know, I remain strong on my mission. I remain resolute that we will make insurance lovable. We'll all work out how we engage differently with clients going forward, and truly help people understand the role of insurance going forward. So delighted to be here and look forward to hearing how the rest of the day goes.
Thank you so much. Thank you for being here. Thanks.
Thanks, Saeed.
Wonderful, amazing. Huge thank you to Nigel and Saeed for the wonderful discussion. We're so grateful to have you both. And again, if you haven't tuned into the Insurtech Insiders podcast to hear Nigel's thoughts as insurance continues to grow, I highly recommend it. But before we get into the bread and butter of today, our startup pitches, I have a few housekeeping rules, as I know the Attendify platform that we're streaming on today might be new to a few of you. So you can see in the Watch Now Insurtech live stream box, you'll see the full day's agenda. And via the highlighted filters at the top of the screen here, you can search through specific folks that are on the platform today, see who else is watching, and of course, participate in some of the polls and conversation that we'll have throughout the day. You can also filter through to find startups by geographic location, by topic or focus area. And of course, you can see the little green camera if they are available and online to chat now via the Meet Now feature, which is there. Perfect. And now we're just going to jump right into it. So kicking us off today for our startup pitches, kicking us off for our property and casualty bunch, we have first up Hosta Labs. Hosta Labs automates the analysis of images to interior property structures to provide in-depth property data and technical drawings.
Hello, everyone. My name is Henriette Fleischmann. I'm co-founder and COO of Hosta Labs. At Hosta Labs, we rethink on-site property assessment. Sending people on site is time-consuming and costly, averaging up to $350 per on-site property assessment. And needing to send someone on site causes delays in processing claims and getting repairs started, which frustrates customers and hurts retention. During on-site assessment, most data is still captured manually with pencil and paper, and mistakes are inevitable. This pencil and paper approach causes further delays, because the information then needs to be rekeyed into your systems to get things moving. We completely reimagine property assessment. With Hosta, you no longer need to send someone on site. The homeowner can simply send you a few snapshots of the room. No app download required. And our AI engine analyzes those images to calculate all of the data you need. We make all measurements and outputs available via APIs. These are easy to configure. This includes measurements, material analysis, and eventually automated risk and damage identification. We also automatically generate floor plans in 3D models of each room. Our automated property assessment can accelerate and take off variability of both home inspection and claims processing to provide you with all the information you need to price a property at value and to strike through claims. Our technology drives meaningful results with 70% faster turnaround times and 50% lower estimation costs from non-pallet objective assessments of each room. Hosta differentiates from other solutions in the market. We have a highly technical team with strong knowledge about the built environment. We can tell you what is and isn't possible. The customer receives a link via an email. No app download required. And we achieve 95% accuracy with only 2 pictures of a space. On top, we provide contextual information from 2D images, which allows for use cases that go beyond material and measurement takeoffs. We are partnering with home insurance carriers to price properties to value and to strike through claims, saving hundreds of thousands of dollars. On top, we are working with contractors and home improvement companies to create a valuable ecosystem. If you are interested in partnering with us, reach out to us at founders@hostalabs.com.
Awesome. And of course, the Hosta Labs team is online if you'd like to check out their booth on Attendify and chat with Henrietta and the team. Next up, we have QOMPLX. QOMPLX applies artificial intelligence to solve complex and real-world problems at scale.
I think what is exciting about QOMPLX and QHelm in particular is that we are bringing to bear our data analytic and data orchestration technology to the insurance problem. The problem the insurance industry has right now, especially when it comes to modeling, the products are too expensive, there's a lack of diversity, and those products aren't integrated with a user's workflow. So we're providing one affordable platform with access to multiple models, multiple services, and multiple data integrations. We're providing access to different models, which often have different interfaces. We are also reducing the total cost of ownership by having usage-based pricing, no large contract commitments, only use what you need and pay for what you've used. We're allowing underwriters and brokers to make more informed decisions on a platform which is more integrated, which allows better underwriting and broking outcomes in the same platform. At QOMPLX, we believe that catastrophe models should be at the heart of a wide ecosystem of interoperable tools and services, running from data capture to capital modeling and portfolio optimization. Ultimately, CAP models should be part of a whole data factory, which supports better and reinsurance underwriting outcomes and are not simply standalone reinsurance pricing and risk management tools. We believe that it should be easier to combine current hazard modeling with more detailed exposure and vulnerability data, be that property survey data or remotely sensed property damage assessments. And finally, we believe that any system should be flexible enough to support real-world business questions, not artificial ones. Perhaps a user might want to examine the impact of targeting a new group of clients sourced through a CRM platform, or perhaps look at the potential for contingent business interruption claims from a supply chain breakdown in the wake of a cyber event. Let's look at these in turn. Today's models have limited connectivity with the rest of a user's data ecosystem. The process is often clunky and unnecessarily mediated by human users. Data should flow seamlessly from ingestion, from a broker portal perhaps, to cleaning and enhancement through the catastrophe modeling process, with the output integrated with pricing engines, optimization tools, and capital models, all of which should be managed automatically with a minimum of human interaction. QHelm provides rule-based, just-in-time workflows and orchestration to do just this. QHelm can integrate data such as mortgage appraisals or remote sensing of roof maintenance and tree proximity into the catastrophe modeling platform, allowing users to create a more appropriate and data-informed view of risk. With an appropriate internal audit trail, this is our vision for the way a data ecosystem should operate. We believe that catastrophe modeling should be part of an ecosystem that allows users to constantly ask real-world what-if questions. For example, how would our portfolio perform in different scenarios if we had written some of the risks we previously declined? Or are there risks we should have written at a different level or different capacity? We are committed to creating a world where insurers and reinsurers can build an insurance data ecosystem with catastrophe modeling at its heart, enhance the science in the traditional models with additional data, and use the tools not just to measure what we could have written, what we did write, what we should have written, and maybe should not have written. All of this work will lead to better underwriting outcomes and a more resilient and sustainable insurance industry. So, we are looking for partners to collaborate with us, to provide a peer review of our models and platform, and to provide real-world insurance and risk management problems for us to validate against and inform compelling customer journeys.
Perfect, thank you. And the QOMPLX team also based in London, so be sure to catch those guys at the Attendify booth before they log off for the evening. But next up we have Pano. Pano builds cutting-edge technology to combat the devastation of wildfires.
Hi, my name is Arvind Satyam, and I'm the Chief Commercial Officer of Pano. Our product, Pano Rapid Detect, is an integrated wildfire situational awareness and response management platform. Pano's story began almost 18 months ago. I grew up in Australia as a kid, and I was no stranger to bushfires, and I was really struck by the devastation of what happened in the fire season in Australia last summer. And then the California fire season just really intensified. And our team really spent a lot of time investigating what was available today. We spoke to a number of first responders, utilities, insurance companies, and it was very clear from regulators as well as governments that were investigating in this, that technology has a key role to play, and the technology could be a force multiplier. Our solution helps address all aspects of the fire life cycle. We can provide value in pre-fire when you're looking at doing prescribed burns and really monitoring fuels and wind and weather assessment, and then focus on early fire. And the key here is to get visibility to ignitions as quickly as they've started. And then once you've been able to detect, the next step is about being able to confirm the incident. So you can provide that actionable intelligence for fire authorities and emergency responders to get to that incident as quickly as possible. And then as the incident is evolving, the cameras provide visibility to monitor the fire and to really look at where that is moving in the perimeter. And then post-fire, you can come back and look at recorded incidents. And this is particularly important for the insurance industry as you look at claims assessment. The solution, Pano Rapid Detect, is a full stack platform. It starts with our camera hardware that captures nonstop 360-degree panorama imagery from mountaintops and cell towers. We then integrate third-party devices and data feeds, such as satellites, and over time, drones and other sensor data. And then we ingest that data and organize it in the cloud. Our AI engine uses advanced computer vision techniques to instantly detect first whiffs of smoke 10 to 15 miles out. And our all-in-one web interface then makes it easy to confirm incoming alerts, monitor ongoing incidents, and then provide real-time assessment to risks for assets, and then be able to disseminate this information out to a number of stakeholders, response crews, insurance firms, utilities, et cetera. Altogether, our platform helps insurers detect fires faster, coordinate response efforts sooner, and then support clients with evacuations and increase the number of homes and property that can be ultimately saved. For providers, this translates to millions of dollars saved each fire season in avoided claims. Insurance companies can continue to serve high risk areas with more stability and predictability, and customers can enjoy more peace of mind. We're a team of technologists working to bring our years of IoT and AI experience in both private and public sector to the wildfire space. In February, we completed our seed fundraising, and we're actively working with fire authorities, emergency responders, insurers, and utilities to deploy a number of our stations up for this fire season. We're really excited at the opportunity to partner with insurance carriers, and would love the opportunity to speak with you. Thank you.
Great, and congrats to the Pano team for all of the success to date. Moving us right along, we have Marble. Earn rewards by taking control of your insurance. Marble is building the tools that unlock the true engagement potential of insurance.
Hi, I'm Stuart, CEO and founder of Marble. Marble is building the tools and the technology to unlock the true potential of Insurtech. What's going on in insurance today? Well, carriers and distributors are competing on the same marketing channels, wasting billions of dollars of value. Acquisition costs are increasing as customers are forced to navigate chaotic, crowded, redundant, and sort of frustrating shopping funnels. And modern consumers really expect more and more from their digital experiences. They expect experiences that inform, engage, and provide value. FinTech has delivered on this expectation, Insurtech has not yet. And we have this network that doesn't really work for anybody. Carriers pay commissions, agencies pay lead fees, carriers also pay lead fees, but everyone pays up to the digital marketing channels competing with each other. And then whenever the consumer shops again, the cycle repeats itself, creating a lot of waste. And this causes problems for a $1 trillion industry that's going through change. Consumers are shopping more than ever with auto insurance loyalty falling. Insurers are spending more, while to market to consumers, while consumers see even less differentiation between brands, and NPS is low for the traditional insurance agency. Customers shop more frequently, insurance is more and more a commodity, and customers are not really enjoying any part of the experience. So what would solutions look like? Well, we should take advantage, insurers should take advantage of retention tactics that we know work. They need a compliant way to offer rewards. Customers should be able to manage their insurance in one place without sacrificing price or trust. And we should take a cue from fintechs who already delight with intuitive design and modern technology. And Marble is how the insurance industry will catch up. Meet Marble. Marble is the first comprehensive suite of APIs and tools built to continuously engage with customers on their terms. We're not a new player in an old ecosystem. We're building the tools that will power the new insurance ecosystem. We're built and backed by an experienced team of insurance and fintech leaders and a great team of investors. And now let's jump into what really is Marble beyond all that. Like in straight up terms, what is Marble? Well, we build and operate digital tools that allow consumers to engage with insurance the way they expect to in 2021 and beyond. We do that in 3 verticals: our consumer-facing digital wallet, RLPay.com, our enterprise solutions, which are rewards technology that powers really unique for the insurance industry retention and engagement programs for carriers and brokers, and Marble Link, which is our embedded and instant insurance information collection tool. Our consumer product, let's start here. Marble members manage and shop and earn rewards for all their insurance in one beautiful, seamless, intuitive digital wallet. Insurance is the only common household financial product that still expects consumers to maintain this frustrating one-to-many relationship with their accounts and their policies, where Marble removes that need. And instead, we recenter the relationship around the consumer, giving them a one-to-one relationship with all of their insurance information, again, in this beautifully designed, intuitive, rewards-driven platform. Let's take a look at the consumer product in action. So from here, this is a real consumer product. You can go make an account now and have the same experience. Consumer adds their policy, put some credentials in. From here, our sort of home-built Plaid for insurance will pull those details in, parse them, drop them into their wallet, and they can, it's rich text, they can look at all their policy information, coverage information, they can contact the carrier, things like that. All the things they expect to be able to do. They can then sync multiple policies across multiple carriers and multiple lines. They can answer a few additional questions, and then with a few clicks, and this launched in April, they can also pull quotes right to them, shop, transact that quote, receive it back in their wallet, and do it all in one place, seamlessly, intuitively, and how they expect to interact with digital products. This is, again, Marble's consumer digital wallet. We've seen great traction with our consumer product so far, which has been live this year. We've seen multiple policies, 2 to 4 policies per household being synced, which is great because it drives our cost per policy down, while our user growth has gone straight up. And consumers are motivated to engage with it. We've seen great traction, great pull-through on our shopping funnel, and we expect to see the same traction as we introduce more features in the future. Speaking of those features, our consumer roadmap includes, these are what's live: digital wallet, rewards program, shopping embedded, payments embedded in the platform, life insurance support for the Marble wallet, additional financial services, and smart home and risk reduction mitigation. And again, based on our interaction with shopping, we expect to see strong pull-through and engagement with the Marble wallet for this. Now let's talk about enterprise. We craft digital experiences that delight carriers and brokers by providing ongoing, real, tangible value. We reward customers for being positively engaged with their insurance, and we improve retention and lower costs for the carriers and brokers. And our API-first platform gives consumers a one-click access to a compliant rewards and engagement experience. What does that look like? Well, here we have our enterprise mockup, which is about to go live with our first carrier. Here, consumer enrolls. They get an explanation of the benefits. From here, then, they see all the actions that we've agreed with the carrier they want them to take to, again, improve retention and reduce costs. As users take those actions, we confirm them and push them rewards. We handle the rewards process, thus making it compliant. And then later, consumers can redeem those rewards for a variety of gift cards, charitable donations, really any number of things that we want to work on with the carrier. What are some behavioral goals that we can work on? Well, we can reward account setup, custom onboarding, community engagement on the social side, testimonials. We can put risk in telematics, step counting, proactive home care, or we can do expense things, again, lowering the cost of that book of business, switching to paperless, incentives for telematics, switching to ACH payments. And over time, we've developed a roadmap to launch a pilot in 90 days. I won't walk through this whole thing, but from start to finish, the technology is built, the front end is built, or we can embed directly in your existing applications And as long as we can identify 5 to 20,000 users based on the state or other sort of cohorting mechanism, we can get a pilot launched with you in 90 days to test this retention, cost reduction, and engagement pilot. Our progress has been great. We're excited to launch with our first top 15 national carrier this summer. As they describe us internally, we're a unique program to pass savings directly to the members and added motivation to do the work to earn discounts. And we have a strong pipeline, all based on inbound work, and now we're scheduling integrations into the next year. And yeah, that's Marble. We're excited to talk to really everyone from Plug and Play. But if you are a carrier or broker and you're interested in our 90-day pilot, please get in touch. I'm Stuart at MarblePay. We're working hard to schedule as many as we can. And we look forward to chatting. We're sort of scheduling late 2021 into 2022 now. So yeah, shoot me an email, and thanks so much.
Really awesome team, Stuart and the team at Marble. Please be sure to reach out to them on Attentify today. Next up, we have Kinetic Analysis Corporation. Kinetic Analysis Corporation specializes in the creation and delivery of a multi-model view of hazards, damage, and economic impacts caused by tropical cyclones and earthquakes occurring anywhere in the world.
Hi, my name is Rick Murnane, and I'm the CEO of Kinetic Analysis Corporation. Today, I'd like to talk a few minutes with you about Kineticast, our web app for real-time information on hazards and impacts from tropical cyclones and earthquakes occurring anywhere in the world. More specifically, this presentation is going to focus on a use case for the chief claims officer in an insurance company. I'm going to ask you to imagine that you're in their shoes and need to plan your company's response to a landfalling hurricane. Consider as an example last year's Hurricane Laura. You know a major hurricane is going to make landfall, and it likely will have a big impact on your clients. You're going to need to find quickly large numbers of independent adjusters to visit your clients that experience damage and loss. But where do you need them? What clients are going to be affected? How do you make an educated guess to answer these questions? If you have access to catastrophe risk models, or your broker provides you modeling services, you can use a synthetic event from a modeler's catalog. However, there is no guarantee that this event will behave like the live event. Regardless, you'll use information from the National Hurricane Center. The left figure shows forecasts of the track and, at 6-hour intervals, the location, maximum intensity, and wind radii in quadrants based on the NHC forecast. In addition, the cone of uncertainty is provided, but this is the same for all storms and based on the forecasts for the past 5 years, not Hurricane Laura. On the right is an image of the forecast and wind speed probabilities. But the winds forecast by NHC are for open terrain and not adjusted for surface roughness or topography. Kineticast can provide you geospatial data on terrain-adjusted winds as well as footprints for storm surge, rainfall, and wave height. On the left is an example of the wind, and on the right, the storm surge footprints provided by Kineticast. Our oceanic and atmospheric models use the information provided by forecast agencies and guidance from models to provide multiple detailed views of the potential wind, storm surge, rainfall, and wave hazards. Kineticast provides hazard data at a resolution of about 2 kilometers in real time and about 1 kilometer post-event. By the way, these footprints are updated whenever new information becomes available. To find information about tropical cyclones occurring in other areas of the world, you need to look at other agencies. As an example of a more recent event, let's look at Tropical Storm Choiwan in the Western North Pacific. Common sources of information are the Joint Typhoon Warning Center and the Japan Meteorological Agency. Both agencies provide wind radii and location information. But with Kineticast, you can find detailed data on tropical cyclone hazards for storms that occur anywhere in the world. Here is an example of the maximum winds for Choiwan based on JTWC forecasts. This same information is available for forecasts from the JMA and other model guidance. But if you're a claims officer, you don't really care about the hazard. You want to know about the storm's impacts. Kineticast has you covered. Kineticast offers information on the population exposed to winds or storm surge at various intensity thresholds. In the example shown here, tropical storm force winds at admin level 2 aggregation, which is equivalent to a county in the USA. But not only that, Kineticast provides real-time estimates of the economic impact for storms anywhere in the world, again at a variety of admin levels. In this case, the impacts are relatively minor as Choiwan was relatively weak as it went over the Philippines. And not only that, Kineticast offers insights into the impacts on a variety of critical facilities, including the shutdown time and length of shutdown for airports, seaports, medical facilities, and power. So what can Kinetic Analysis offer you? Right now, We can provide multi-model global tropical cyclone, earthquake hazard, and economic impact data. Soon we'll have a web app with interactive maps and graphics. In late 2021, we'll have global flood and drought model and agricultural indices with daily to seasonal forecasts. And in 2022, we're shooting for a European real-time windstorm and economic impact forecasts. Our clients include major companies in insurance, the federal government, and the weather industry. And we supported over $5 billion in parametric risk transfer. Thanks for your attention. I look forward to answering your questions.
Awesome stuff, Rick. And next up, Praedicat. Praedicat is a liability emerging risk analytics company for casualty insurers and global industrial companies, excuse me.
My name is Bob Reville, and I'm the CEO of Praedicat. Liability risk today is higher than ever, and the need to anticipate the risk, manage it, insure it, and reinsure it is critical. Liability is prone to large-scale mass litigation, such as asbestos, which drove dozens of bankruptcies for corporations and their insurers. Today, we see jury verdicts reaching new heights and a string of new mass torts, including PFAS and opioids. And yet, companies and their insurers still identify and manage emerging risk the old-fashioned way. Largely human-driven, committees of executives struggle to prioritize or quantify emerging risk to drive early actions. This is the problem that Praedicat is here to solve. Praedicat's emerging risk data solution is technology-driven and designed for action. Our framework divides the emergence of liability risk into 3 phases: emerging interest, emerging damage, and emerging litigation. I'll describe each in turn. The emerging interest phase is where risks are first identified, and we have designed it to be as early as possible. Where do we find the next asbestos or opioids? Our answer is science. We rely on algorithms to search the text of newly published science, investigating whether commercial products and practices cause harms. Once a new risk is identified, we connect it to exposed industries and over 100,000 specific companies across the globe. We then track the science as early articles become rich literatures and literatures become scientific evidence in litigation. In the emerging interest phase, the main action is to be prepared, buy appropriate levels of insurance, and to be ready to act when the science develops further. At the other end, once lawsuits emerge, we're in the emerging litigation phase. Too often, defendants wait until now to act, but it is too late for avoidance, and often too late to secure appropriate insurance coverage. So it's the time to defend. Praedicat's rich scientific literature data helps our clients with claims defense strategy, and our scenario models and litigation tracking data help our clients anticipate where the litigation may impact them next. The crux of Praedicat's solution, though, is in the emerging damage phase, the Goldilocks phase for action, neither too early nor too late. It is the time for product stewardship actions, such as substitutions and warnings, and it is the time to secure appropriate insurance coverage. For insurers, it's the time for exposure and aggregation management, and for underwriting the companies that know how to manage and mitigate the risk. To help our clients to act, we quantify the risk. Using the information and the science, we've developed a suite of customizable scenarios across a broad range of emerging risks, and a full probabilistic framework that allows for calculation of expected losses and tail risks. All these data, identified risks, scientific literatures, bucketed to phase and connected to companies, are delivered to our insurance and corporate clients via our SaaS software products, Cometa and Chemeta. Today, Praedicat is the leading solution for liability insurance underwriting and risk management. Increasingly, Praedicat is working directly with global industrials, managing risk at the source and securing appropriate insurance coverage. We are helping our clients anticipate liability and take action to secure a safer, healthier, and financially secure future. Thank you.
Thank you. And I know the full Praedicat team is online and would love to take your questions today. Next up, we have Homee. Homee is the leading technology-enabled claims management company connecting policyholders, insurance and warranty companies, and premier pro networks.
Hey everyone, Chris Russell with Homee. Excited to tell you about our company, the Tech-Enabled Guarantee Repair Network. So what is Homee? Homee provides and brings together a technology platform and a 20,000 plus premier service pro network. We're tackling the insurance claims use case, bringing together key constituencies and facilitating a great property insurance claims experience. So who do we really cater to? We really cater to and bring together insurance carriers and adjusters, policyholders, premier service providers. We do that all from the first notice of loss to the finished job. Homee focuses on jobs below $10,000, and we're really focused on reducing the claim cycle time and providing a great experience, thereby increasing policyholder NPS scores. So just to contextualize where we sit in the transaction, Homee has developed relationships with 6 of the top 12 property and casualty based carriers in the US. And we essentially sit in the middle of these transactions. So we have the technology platform to be able to facilitate claims management between back-end claims management systems and the Homee platform. We go out and also find a great service pro network to facilitate these claims. And we document the entire process with our technology. We ensure quality control, and we provide a 3-year workmanship warranty on all the claims that we do service on. And like I said, all of this provides a great NPS score for policyholders at the end of the transaction. On the right-hand side of the page, you see the different types of pros that we partner with. It's really restoration firms. We've developed a great network of skilled service trades as well, plumbing, HVAC, electrical. And then we have a great network of independent handyman that can do odds and ends and great work for us as well. From a platform perspective, I touched on it earlier, but we're really an 85-person company. About a fourth of our employees are on the tech or dev side. And they're really about hooking up the claims management systems with the Homee platform and allowing that information to flow seamlessly via APIs. So some of the names that we partner with: Claims Connect, Guidewire, Duck Creek, coming integrations in the near future. From a policyholder experience, this is really Homee's bread and butter. We were founded as a mobile-first company. We still provide that functionality to policyholders. If they have an emergent leak, for instance, we're able to recommend the Homee app for download and get a plumber out within 60 minutes to stop the leak and really limit damages in that scenario. From a coverage perspective, we're really primary in about 20 US states. We do have a 10-person vendor onboarding team that can help facilitate opening new states for us. And we're constantly finding, vetting, and really managing our pro network. I mentioned some of the support we've gotten from the insurance industry. It's been great. We've got investment from 3 top carriers: Liberty Mutual, State Farm, The Hartford. We've raised about $35 million to date. We've got about 18 months of availability in terms of cash before our next capital raise. And we're really at this point enabling integrations to scale. We're building out our pro service network to facilitate more and more transactions. And we're really just scaling the company. So to reiterate, Homee is tackling the property insurance use case. We're doing this with technology. We're doing this as a general contractor. We're facilitating a great experience for all the constituents involved in the transaction. We're very much looking forward to partnering with anybody out there who hasn't gotten with us, and we look forward to talking to you soon. Thanks. Bye.
Thank you to the team at Homee. And next up, Tint. The Tint insurance platform provides modular, no-code tools required to embed insurance into your products and services. Leverage your access to unique risk and data to delight your customers while improving your unit economics.
Hi, my name is Mateus Rielfi. I'm the co-founder and CEO of Tint. We make it easy for insurance companies to distribute their products through tech platforms. Today, we're going through a massive transformation in the insurance industry, where more and more of insurance products will be sold through tech platforms because they have access to customers They have unique data, and their products and services create unique risks that can be monetized with insurance products. This is a huge opportunity. According to McKinsey, about 30% of the insurance premiums, or $480 billion, will be distributed through B2B2C channels by 2030. And it already happened. We can see examples in many different verticals where tech platforms are awakening to the opportunity of distributing insurance products, which also create a great opportunity to insurance companies to work with them. However, it's still very hard to make this happen because neither the companies nor the insurers have the software required to effectively distribute those products, the capabilities to do real-time underwriting, and the insurers don't have access to those platforms because that would require a sales force that would only do that, which is typically not something that insurers do today. That's why we created our platform. We provide everything required to launch embedded programs. We have both the software with the full policy admin and underwriting engine that lets the companies and the insurers quote and bind those products in the context of the tech platform. We are also a licensed broker, so we can help the insurance. We can match the insurers with the tech platforms to make sure that we have always the best partner to underwrite those programs. So from both the platforms and the insurance perspective, it's very easy. It's one API integration on the platform side, and we can get started. And this is how exactly we work with insurance partners. So we work with the companies to set up what is the insurance program. So we help them understand what they need. Then we submit this needs to the insurance partners that we have in our network with information about the company, the risk, and a very granular exposure data. Then the insurance partners quote and decide if they want to participate. And eventually the tech platform picks what's the partner that they want. And Tint takes care of all the administration to make this program run well. And there's no cost for the insurers. So it's really a no-brainer channel, a no-brainer opportunity for those companies. We already have great partners that have been working with us and receiving some opportunities through our platform, but we're really looking to grow this number. We have 14 customers right now. We grew over 50% in the last 5 months, and we are expecting to continue to grow fast and reach over 50 customers by the end of this year. And we are backed by world-class investors that include Y Combinator and fintech specialists like Deepsense and Nayya and Plug and Play. And we also have some great angels and operators that work with us, such as Vikram Pandit, former CEO of Citigroup, as well as other founders and CEOs in the Insurtech and marketplace space. That's it. We are really looking forward to having more insurance partners on our platform to provide you profitable premiums and being your lowest cost distribution partner. So please reach out to us if you're interested. We are really looking forward to talking with you. Thank you. Bye-bye.
All right, and thanks so much to the Tint team. We're going to send you out for a quick 5-minute break, maybe grab some coffee, stretch your legs, and reach out to this morning's startups, and we'll be back here in about 5 minutes. We'll see you soon.
Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
All right, welcome back. Hopefully you're making some great connections this morning. Jumping right back into it, for our next general insurance startup portion, we have Sarus leading us off. Sarus makes the standard of privacy used by Apple, Google, or the US Census available out of the box for all AI and BI projects in the finance and healthcare industries.
Hello, I am Maxime Agostini, CEO and co-founder at Sarus. Today, we're going to see how to take the gold standard of data protection, the standard that's being used by Google, Microsoft, Apple, or the US Census, and make it available out of the box to every financial or healthcare company. We at Sarus want to make it possible to unlock maximum value from every sensitive data asset that your organization has or wants to use. When there's a data asset, a very sensitive data asset, and you want to do machine learning or analytics or BI on it, the first starting point is that the access is not possible because the data is sensitive. So you want to go through anonymization. And anonymization is a mix of removing the things that might lead to identifying an individual, but trying to retain enough value. And at the end of the day, because you haven't defined properly what anonymous is, you have a lesser data set that's somehow harder to link to someone, but there's still residual risk. And because you don't know, you would have to go through compliance. And this compliance process might take 6 to 12 months. So you have the right to use this data. This is extremely restrictive. It's painful, it takes a lot of time, and it deletes a lot of value along the way. At Sarus, we propose a completely different approach. We don't start with the premise that you should send personal data, anonymous data, over to the data scientist. We let the data scientists, the data practitioners, query the original data through this gateway here. The gateway, you install it in your existing infrastructure. So you don't move data, you don't make copies, the data is pretty safe. And what we can guarantee is that every output that they extract from the data is provably secure because we use the gold standard of data protection, aka differential privacy. This is a complete game changer. Now, every single time someone wants to access a data set, you don't need to wonder what they want to do with it, what's in the data, or who they are. You have a mathematical proof that they won't be able to see sensitive information. You can grant this access through the Sarus gateway in minutes. That also means that you can bring on board data practitioners that would not have access to data otherwise. Maybe they're external vendors, maybe they're from a different part of the organization. Collaboration is made 10 times easier. And finally, you don't need to delete things in the data in fear of re-identification. You don't need to delete all the text because you don't know what still resides in the text. You can leverage the data in full fidelity. Now we're talking about starting data projects in high fidelity in minutes. When we work with a financial organization or healthcare organization, typically what we see is this. They have an existing data lake or data warehouse, and they want to make it easier to grant access to those data sets when it's sensitive. They install the Sarus service right there, and anyone can now query the data. Querying the data is made very easy with Sarus SDK. They can submit SQL queries or machine learning model, and they get executed on the original data, not on a poor synthetic version of it. However, when they do need to see individual lines, we do leverage synthetic data because that's something that can be shared with them. And mixing the two, they get the most of their value. It means that top projects, including anyone in the organization, other lines of businesses or partners, are easy to start. It also works the other way around. If you want to tap into data in different silos of the organization, might be different regulatory borders, that's easier as long as you don't have you have different Sarus services installed on every silo. So this is Sarus. We are very excited to meet you and discuss how you can be faster and more efficient in your digital transformation and innovation projects when they rely on sensitive data. Thank you very much.
Thank you, Maxim. And next up, Workera. Workera is an enterprise workforce skills measurement, benchmarking, and upskilling solution focused on data and AI capabilities.
Hi, Plug and Play. I'm Kian Katanfour, CEO of Workera and lecturer of computer science at Stanford University, where I co-teach the deep learning class with Andrew Eng. I'd like to introduce you to Workera, a skills transformation platform that helps enterprises assess and upskill their workforce in AI and data. Let's start with the problem that Workera is solving. Today, there are record levels of investments and anxiety to develop AI and data skills. Global spending on AI will double over the next 4 years to 110 billion in 2024. AI skills shortage is cited by CIOs as the single most significant challenge for their organization. 79% of CEOs are concerned that a lack of essential workforce skills is a threat to the future growth of the organization. So understanding employee skills is the #1 issue for companies today. And that's surprising when you're thinking about the ocean of content available to enterprises to upskill their employees. There are more than 100,000 courses on Udemy, more than 4,000 on Coursera, 50 Elastic Nano degrees, countless courses produced by brick and mortar universities and leading technology organizations like Google, IBM, or Microsoft. So why do 80% of employees still lack the skills they need to deliver on digital and data projects? It's because upskilling is still broken. The education problem has shifted from the availability of high quality content to the navigation of that content. Organizations and employees alike need direction and a way to demonstrate progress and ROI. They're asking the following questions: what skills do my people have? What skills does my organization need? How effective are my people today? How do I upskill my people? And how do I demonstrate ROI and increase capabilities? Companies that are able to answer these questions are nearly twice as likely to succeed in a transformation. So let's now talk about Workera's solution. By leveraging the Workera team's industry expertise from starting Google Brain, building AI orgs at Baidu, Deeplearning.ai, and the academic background from Stanford, we created an assessment evaluating more than 800 micro skills that are critical in AI projects. They focus both on highly technical competencies for engineers looking to upskill in AI and non-technical assessments helping organizations drive company-wide data and AI literacy. After the employees take the assessment, they will receive feedback and the organization can analyze their strengths and the areas for improvement. This leads to an individualized learning plan for each employee that is built using the world's leading content. And note that Workera is not a provider of content, but can help you select the providers and work with your favorite providers to help your employees navigate their catalog and complement it with free content. And finally, micro assessments are used to validate learning and measure ROI. Organizations also have access to a dashboard that allow them to benchmark their teams against the best in class from a community of 1 million AI practitioners. Our assessment technology combines both the academic rigor with the industry expertise. It is very granular, and here is an example. While most content providers consider machine learning to be a skill, we consider it to be a domain. We break it down into 3 subdomains that are needed in AI projects, into topics, and into individual skills that are measured with items written by a team of experts. Our assessment follows a rigorous assembly process and their computerized adaptive tests. This means that employees beginning their AI journey will not get scared by advanced questions, and employees that are more proficient in certain areas won't be bored with easier questions. This increases engagement. Employees will see their results, their benchmark, the list of skills, as well as the content recommendation directly on their dashboard. They're essentially getting access to world-class mentorship. And to ensure the seamless experience and relevant recommendation, Workera integrates with your educational stack. This includes your learning management system, HRIS, or content providers, and also complements the paid learning with free resources that have been upvoted by the AI community. And so you may wonder what's the ROI. So here is an example. Imagine you're upskilling 2 actuaries that are working on an underwriting or risk modeling project. You don't have a granular view of their skills, so you send them through a Coursera data analyst professional certificate. And it turns out that although this content is good, it only covers 30 of the 90 skills that actuary 1 actually needed. and 20 out of the 60 skills for the second actuary. It's also a super long course, totaling 129 hours for each actuary, whose time is extremely valuable. Instead, Workera gives you a detailed view of their skills. You know that Actuary 1 has most of the statistic foundations and Actuary 2 has the machine learning foundation. They should both focus their learning on more advanced content, although on different content. We recommend 3 longer Udemy courses, 1 on data science, 1 on machine learning, and 1 on math, as well as 1 longer course on math for the second actuary, with 2 sets of pre-reading materials. To date, Workera, so this allows you to increase the number of skills that are built and decrease the time that it takes to build those for better results. Workera has now 2 enterprise customers, 2 more in contract stages, and close to a dozen active pilots. The momentum is high and we're excited about the journey ahead. We would be honored to have a discussion with your team to see how we can assist with your workforce upskilling strategy. We normally work with CEOs, CIOs, and CHROs, as well as business unit leaders and heads of data and AI academies. And we can be reached at Kian@Workera.ai or James@Workera.ai, my co-founder. Thank you very much for listening.
Thank you so much, Kian and Jimmy with Workera. Next up, we have Dasha.AI. Dasha is a conversational AI as a service platform that lets you embed realistic voice and text conversational capabilities into your apps or products. With a single integration, create smart conversational apps for web, desktop, mobile, IoT, and call centers.
Hi, my name is Vlad. I'm co-founder and CEO of Dasha, and we are a conversational AI platform as a service. So Dasha is a customizable, fast, low risk, and resilient API to automate voice and text conversations that feels like talking with real human. So it's designed for the integration. It's very easy to integrate. It's accessible by millions of developers, and by developers you already employ. It delivers a human level experience, which means like a better customer experience. And it has like a very quick ROI, no upfront costs, and pay-as-you-go business model. So in 2020, we've been recognized by Gartner as a 2020 cool vendor in conversational AI platforms. And the potential use cases are, for instance, self-service, notification, customer support, NPS, CSI surveys. Industry-specific use cases include for fintech, for instance, debt collection, money transferring, verification, Insurtech, something like claims management, renewals, scheduling appointments, and healthcare, triage, appointment management, branding, retail, purchases and payments, refunds, cancellations, cart abandonment, supply chain, delivery management, logistics, delivery confirmation, travel and hospitality, concierge, bookings, refunds, cancellations, late statuses, late checkout, room service, etc. For energy, it could be outage reporting, claims management, service requests, dispatching, billing collection, etc. So in enterprises, choose Dasha because of like no upfront costs, pay as you go, API first, easy integration, human-like voice, log in. So it's a completely self-service, and you own your API. So let's take a look at the demo. So now I'm initiating a call to my phone using one of the demos we have. So I'm having my phone here right now.
Hello, this is Superbank. How can I help you?
Hi, I want to transfer money.
Absolutely. We can assist you with that. How much money would you like to transfer?
$100.
Okay, for $100. Is that correct?
Yeah, that's correct.
We found that you have multiple accounts. From which one of these 2 bank accounts you would like to transfer from? Your savings account ending 3321 or deposits account ending 4455?
My deposits.
I got it. I can transfer to savings account ending 3321, to Wells Fargo account ending 9241, to Bank of America account ending 4879.
Wells Fargo, please.
Got it. So transferring to Wells Fargo account ending 9241. Is that correct?
Yeah, that's correct.
Great. Let's summarize. Transferring $100 from deposit account ending 4455 to Wells Fargo account ending 9241. Please confirm.
Yeah, I confirm.
Wait for a second, please, while I'm executing the transfer. Transfer is completed. Have a really nice day.
So now let's take a look how this actually works inside, right? So we have a Dasha Studio, which is a graphical user interface tool. So you can design the flows using a drag and drop interface, and even a non-developer can do that. And on the SDK part, it's also really easy. So basically the first line, we import our API. The second line, you deploy your application using the API key we gave you, and you connect to your existing infrastructure. You integrate with your infrastructure using a very simple callback interface. So thank you for your attention. Thank you.
Thanks, Vlad. And next up, we have Xilo. Xilo helps insurance agencies compete against rising digital competition with an easy-to-use, fully customizable software platform they can use to engage with customers, provide instant insurance quotes, and automate sales workflows.
My name is John Corn. I am CEO of Xilo, where we provide software to insurance agencies that help them sell to and service the modern insurance customer. We started Xilo about 3.5 years ago out of my co-founder's insurance agency, where he was an agency owner and a licensed agent. I was a software engineer. And the reason why we started this company was because we noticed that the industry was digitally transforming and traditional agencies were falling behind. There are a couple of studies that have been conducted that help further prove this. 75% of the workforce will be millennials by 2025. That is the first digitally enabled generation in history. 76% of insurance shoppers started their journey online in 2018, and more recently, a study by PwC states that 41% of insureds wanted to switch their insurance provider due to a lack of digital services. And so it's easy to say that agencies are struggling to adapt to this digitally transforming market. And it's because agents are low technical users that don't have a great understanding of digital experiences and customer journeys. They definitely have strengths in other areas, but technical software and digital experiences are not those strengths. Let me walk you through what a traditional agency's process is like. So whether a lead comes in through the web, through the phone, or through referral and walk-in, it all goes through an agent, through a human. It starts with them. They're collecting information, they're writing it down on a piece of paper, and they're entering into 3 or 4 different systems, whether it's an AMS, Rater, Cord Form, Supplementals, CRM, Excel sheets, you name it. And then they're following up with that customer manually, all in all creating this long and tedious process for both the customer and the agent. And so with Xilo, we help them transform that experience overnight into what more so a digital agency would provide. And so with Xilo, if a web lead is coming in, you can get a customer all the way to the quote with Xilo. You can integrate it into all the different systems that the agency is working with, and then you can follow up with that customer automatically. But like most agencies, if you don't have leads coming in through the web, if you're taking information in from the phone or through walk-in, you can enter it into one system. It'll integrate into all the different systems. It'll follow up with that customer automatically. All in all, cutting down the time it takes to quote a customer by anywhere from 75 to 90% for that insurance agency. And so let's take A to Z Insurance, for example. A to Z Insurance is a customer of ours who in 2017 had great organic traffic, but very little leads converting on the web into opportunities because of the bad experience that they were giving customers. The experience they were providing was here over on the left, what you see. And then when they started using Xilo, they started providing experience over on the right. Now, this was a fully customized shopping experience that they presented to their customers, embedded on their website, branded to their agency. And the result was they were able to increase their lead flow by over 900% by providing a better experience. But on top of that, All the information is integrated into all of A to Z Insurance's different systems, cutting down the time it takes for them to quote those customers by almost 90%. And so to recap here, insurance is digitally transforming. Agencies are struggling to adapt to this new market, and it's because they have bad software and old practices, and it's making their processes long and tedious. And Xilo helps turn those traditional agencies into digital agencies overnight. And so our goal here is to partner with you as an organization, whether it be an insurance carrier, insurance management system, even data collection systems, to help digitize these agencies' businesses. You can contact me at john@Xilo.io to reach out for that connection. Thank you. Have a great day.
Awesome. Great stuff from Xilo. And I know John and Eli, founders, are online now and would be happy to take any questions you have. Next up, we have Sensible. Sensible is developer tools for automated document processing.
Hi, I'm Ming, and I'm one of the co-founders of Sensible. At Sensible, we're building a set of developer tools that helps you extract structured data out of documents. Sensible takes in digital PDFs or scanned images and gives you back structured data in a flexible JSON format. Under the hood, Sensible extracts away all the messiness of dealing with PDFs, like having to straighten and clean scans, classify documents, and do direct text extraction or OCR. Our unique approach to this problem is based around SenseML, our document query language that makes it very easy to express what data you want to extract from a document and where it is in the document. With Sensible, you have full visibility and complete control over how the parsing is done. Compared to a machine learning-based approach, where you're dealing with a black box model and have no recourse when something goes wrong, with SenseML, you can see exactly why the error happened and then make changes to the configuration to account for that edge case. This means that for each kind of document you want to get data out of, you can get up and running with just one sample document. No need to label thousands of documents for training data, and no need to write custom code. The platform is built to be flexible, and we're currently working with organizations and documents across many different verticals. We're working with insurance companies to extract data from policy declaration pages, quotes, and loss runs. We're helping financial service companies get data out of things like 1099s and W-2s. And we're even helping real estate software companies automatically extract data out of home inspection reports. Let's take a quick look at the Sensible app to see how this works. So here we are in the Sensible app, and this is where you would edit or create your SenseML configurations. So on the left, you have the SenseML. In the middle is the document that you're basing the SenseML template on, and on the right side is the output. You can see by some of the boxes that we've drawn the data that we're currently pulling out, things like the policy number and the coverage period. With just a few lines of SenseML, you can quickly add a new data field to this template. So let's go ahead and do that. So let's say I wanted to pull out this additional personal injury protection limit. All I would need to do is put in just a few lines of SenseML. And you can see right away the document updates, this thing gets highlighted, and we're pulling out the limit right here. After you've made changes, and if you hit the publish button, these changes will be pushed live to this endpoint so that the next document you send over will have this new data field. So that's it for an overview of Sensible. If this is at all interesting, please come chat with us at our virtual booth. Thanks.
Awesome, thanks, Min. And next up, we have Surfly. Surfly is on a mission to innovate online interactions with their flagship products, universal co-browsing, video chat, real-time e-signing, and more.
Hello, Tarek Valen from Surfly. Greetings from Amsterdam. I trust everyone is staying healthy and happy, and thank you, Plug and Play, for this opportunity. I previously pushed a startup to an IPO and a Google acquisition, and I really like my technology. But what happened last year is much bigger than technology, because we were all faced with the same reality, trying to find new ways to connect with our customers, with our colleagues, and with our loved ones. You could say that shift happens. It's a time of global transformation where every industry is being forced to adapt to this new remote reality. One such industry is life insurance, where we have considerable work on. Agents who have been accustomed to these in-person interactions have had to rapidly recalibrate to providing a digital and remote first advice, often to people who are facing economic and health challenges. But have no fear, because there's a new wave of insurance superheroes on the horizon. Surfly is a universal co-browsing and video chat solution that empowers your agents and your brokers to connect and collaborate online with their customers in a fast, simple, and secure way. We upgrade any existing interaction into any channel or device into an immersive in-person experience, making digital interactions incredibly easy. Unlike other tools that you're used to, like Zoom and WebEx and Teams, your own digital assets become a fully branded and trusted communication platform, and your agents and your customers and agents don't even have to install a single thing. This allows you to be in full control of the communication that your agents are having by masking sensitive data like social security numbers or credit card numbers, by integrating seamlessly within your CRMs like Salesforce, and by providing you a very powerful audit log API that allows you to be fully compliant and from a sales reporting aspect as well. With a cherry on top, we allow you to these superheroes to provide real-time document editing and e-signing with their customers so that they can offer that instant protection. But what about the bots? Because we've been hearing about them a lot. But let's take this use case and head over to the Far East, where insurance powerhouse Ping Han, who have 1.1 million independent agents selling their policies, understand that even though they're trying to build this castle of data, they understand that these agents are responsible for turning over billions of revenue. And so it's paramount we empower them. We also know as humans that building a relationship is much more than a set of transactions. And in an industry like insurance, it's key that we, that we provide this more of a human touch in an easy and secure way. Gartner, one of the world's leading analyst companies, also understand that the solution we have here is a key differentiator and allows you to bridge the gap between these human and these AI-driven interactions. The bottom line for insurance providers, what can we do? We help you to improve your revenue and your distribution. We help you to improve your onboarding and NPS. We help you to improve that holy grail of the customer experience, but not just that. We also focus on that agent experience, and we can go to market incredibly quick because of our easy to API first technology with open documentation as well. We provide a layer across all of your existing assets, whether they be customer portals, broker portals, policy admin tools. And this allows your agents to distribute your products anywhere, anytime by complementing those existing investments. Let's talk about success story and head Far East again, over to Singapore, where AXA, the world's leading insurance company, went live with 1,000 agents in only 2 weeks with our technology, allowing their advisors to collaborate over their ease application through a whole process of creating and finalizing a life insurance policy. We allow these agents to share brochures, authenticate with their government digital identity. We also help them to integrate with their e-signing and to connect with their payment portal. They selected Surfly over Zoom because of our security and our advanced capabilities. Around the world, we are renowned for winning many competitions. We're finalists in the FIS FinTech Accelerator in the US last year. We also, a couple of years ago, won the DXC insurance competition out of 500 companies. And just in December, we were crowned winners of the Creating the New Normal Challenge at the Singapore FinTech Festival out of 7,000 companies. We are raising a Series A. We have an ARR of around 2 million euros. We have a growth rate of about 9% month over month, with 30 superstars from 21 nationalities working our way around the world. That's up just from 9 at the beginning of 2020. 200,000 users globally, and our focus markets are US, Canada, Europe, and APAC. Lots of value, and you can see we like to have fun too. Here are some of our customers and partners and references. We have a considerable amount of use cases that we can share with you. Please do pass by our table, and I hope you enjoy the rest of the show. Thank you very much.
Thanks, Tarek, and even more exciting updates over the last few weeks for the Surfly team, so be sure to reach out to Tarek. Next up, we have Inpher. Inpher pioneers cryptographic secret computing technology for secure, privacy-preserving analytics and machine learning.
We are in the age of machine learning and AI, and we have an insatiable appetite for data, but we're facing headwinds. Consumers, policymakers, and regulators are justifiably voicing their concerns about the use of data and privacy. And this is leading to balkanization, data silos. Now our data lakes are becoming data ponds. Sometimes our data lacks the diversity, which leads to algorithmic bias. And there's sovereign data policies, which are inhibiting our ability to transfer personal data across borders. We need a way to compliantly, securely, and privately compute on that distributed data without moving it. I'm Jordan Brandt, the co-founder and CEO of Inpher, and we pioneered secret computing to solve this problem. We're enabling our customers to compute data while it remains encrypted, to enable privacy-preserving machine learning and analytics. We're here to dispel this false dichotomy that you have to make a trade-off between data utility and data privacy. You can have them both. So a quick synopsis on encryption. There are three primary pillars of encryption. You have encryption in transit, encryption at rest, which I hope all of your organizations are doing today. At Inpher, we're focused on the more elusive target on encryption in use while it's being processed. This is what we call secret computing. But now this isn't only about data security and privacy. It's about what you can do with your data because it is secure and private. We're just scratching the surface on the applications and financial services with our customers today. Within your organization, we can enable you to compliantly run analytics across jurisdictions, across lines of business. We're seeing banks partner with telcos and insurers to build better credit models, to build better risk models and customer marketing applications. And we're really excited about the evolution of consortia to fight fraud and AML with enthusiastic support from the regulators. The basic simple definition here is more data equals better predictions, right? Within your organization, within a department, within a line of business, you may not have the diversity of data that you need, again, leading to algorithmic bias or suboptimal performance. By combining more data, you're able to get better predictions with simpler models that you can explain to regulators. And as we see more cross-industry sharing, we're starting to see more predictions that were impossible to make before secret computing. To explain this a little bit, our XOR secret computing engine is in production today with customers around the world. And let's walk through a scenario. Let's say that you have a data scientist who wants to be able to train a model on distributed data to which he or she does not have read access. It's very simple. They're going to use their current tools and develop their model in, say, Python. They're going to submit that to our XOR service, which will compile it into a secret compute circuit, which is sent to these distributed data sources. That data is then computed while it's encrypted and exchanged between these parties, respecting all of these sovereign data silos so that you can meet compliance requirements like GDPR. Those results are then broadcast back to the analyst platform where they're combined into the final output, which is accurate to within 6 digits of precision. So to recap here, the data scientist was never exposed to PII in those data sets, the XOR service never saw the data, and all those data silos remained intact. Now, when you compare this to other privacy-enhancing techniques, secret computing is the only one that does not trade off between privacy and precision. Our commercial product, XOR, is based on our advances in multi-party computation. We also have an open source library for fully homomorphic encryption called TFHE. And by the way, both of them are quantum resilient. Inpher is headquartered right here in New York City. We also have offices in Switzerland and San Francisco. We have an experienced leadership team that's built successful companies before, and we have a very deep and diverse technical team. We've published over 300 papers in cryptography, mathematics, and computer science. But it's not only our team there, it's also our customers and our investors who believe in the company, believe in the technology, and are using it today. So in summary, we're building a secret computing ecosystem with industry leaders around the world. We're deployed live in many locations, many countries. We're starting to see more cross-jurisdictional applications. Today, we're helping our customers improve the current models that they have and do so compliantly. Tomorrow, we're enabling our customers to make predictions that are impossible to do without secret computing. Remember, in the age of AI, you do not have to trade off your data privacy and the utility. Thank you very much. Give us a shout later.
All right, and next up we have Deepsense.ai. Deepsense helps companies gain competitive advantage by providing AI-based end-to-end solutions with the main focus on computer vision, predictive analytics, and natural language processing.
Hi everyone, my name is Michael and I am VP of Engineering and board member at Deepsense.ai. I am pleased to present to you the potential of our company. At Deepsense.ai, we help our clients gain competitive advantage by providing AI-based end-to-end solutions with the main focus on computer vision, predictive analytics, and natural language processing. Since 2014, we've grown into an AI powerhouse with over 70 data scientists and engineers on staff. Our passion for pushing the frontiers of technology has led to a proven track record of close to 100 successful commercial projects. Our clients represent companies from many industry verticals, including retail, manufacturing, and IT operations. Apart from commercial projects, we also heavily invest in research on AI. In collaboration with several universities, scientific institutions, and global corporations, we have made multiple contributions to the field of reinforcement learning. Ultimately, we regularly take top places in global data science competitions, including Kaggle and ODS. We typically engage with our clients in one of two models: end-to-end project delivery or team augmentation. In the first model, we cover the whole development cycle from use case discovery through POC until full deployment. In the second setup, we work in cooperation with customers' teams to expand their technical skills and to speed up delivery. Our offering addresses a broad spectrum, including data science, engineering, business analytics, as well as UI and UX. We look forward to bringing our data science capabilities to your company. Thanks for having me.
Perfect. Thanks to the Deepsense team. And I know they'd love to connect with you on Attendify. We have the whole team online today. But with that, we're going to send you out for a second break. Please reach out to our startups. I know they'd love to chat and answer any of your questions via the Attendify booths, but we'll see you in a few minutes.
How do you track your team's innovation efforts? However that is, we've got an easier way. Let us introduce Playbook. Playbook is Plug and Play's innovation software. It is an exclusive tool only available for our ecosystem's corporate partners. With it, you and your team will be able to browse your curated startups database, create, discover, and rate lists of startups, track your engagement, pilots, and investments, analyze data from the tech ecosystem, organize private sessions with select startups, and so much more. Hundreds of corporations count on Playbook to empower their innovation journey. Get in touch to start using Playbook today.
All right, and welcome back. Excited to kick off our third and final startup pitch block of the day. Taking us right into it is Bold Health, GI care that works.
Hi, I'm Elena Musteza, CEO at Bold Health, and I'm delighted to tell you today how we're delivering the world's most convenient, effective, and cost-efficient digestive care. The gastrointestinal or GI disorders category is massive and growing. 74% of Americans live with recurring digestive symptoms, and about a third will have a chronic diagnosed GI condition. That leads to significant healthcare services utilization with 100 million ambulatory care visits every year and significant spend, $136 billion on GI conditions annually, ahead of heart disease and mental health. And patients get a poor care experience, inconvenient, slow, and with suboptimal outcomes. It can take over 4 years to get an IBS and IBD diagnostic. And when patients manage to see a doctor, they will usually get drugs or surgery targeting symptoms, but not really the root causes of disease that can lead to sustained change. So that could be behaviors, lifestyle, psychosocial factors, stress that have a much bigger impact on the condition than treating with drugs alone. So we also know from research developed in the last decade that an integrative approach to GI care that includes not only a gastroenterologist, but also a dietitian, a psychologist, and a health coach for sustained behavioral change can lead to not only the highest clinical outcomes, but also the lowest costs and highest cost savings. So at Bold Health, we set out to build a platform that is comprehensive, convenient for the patient, and leads to high efficacy and lowest cost. To support GI sufferers around every step of the way to manage both their gut symptoms, as well as improve their emotional well-being. In doing that, we are putting the patient at the center of care with one point of contact, which is Bold Health, where they can get the right care and the right treatment. They'll have access to our virtual care team where they can consult with a doctor, get a prescription or a personalized care plan, and chat with their health coach. And we also onboard patients where relevant onto our digital therapeutic programs for specific GI conditions that deliver effective chronic condition management. And they're based on proven behavioral interventions such as cognitive behavioral therapy, hypnotherapy, and nutritional programs targeted at those conditions. So we have a portfolio of digital therapeutic programs. The first one is for irritable bowel syndrome, the most commonly diagnosed digestive disorder. And we're also working on an intervention for IBD or Crohn's and colitis. Amidi, our IBS product, has seen massive success so far. It's a 12-week program based on cognitive behavioral therapy developed at University of Pennsylvania. And so far, we've had over 15,000 users, majority in the United States, with raving reviews. We've run a successful clinical trial with UPenn on 120 patients with significant reduction across all the primary and secondary outcomes. And we started generating revenues, both B2C and B2B. Our focus is on providing membership bases across employers and health plans, access to our solutions. And an example is our collaboration with GymPass, where 4 million of their members have access to Amidi. And through that program, we have users across the nation and across large organizations and leading national plans. The competitive landscape, Bold Health truly offers the most comprehensive solution, not only composed of access to a multidisciplinary virtual care team, but also to highly effective programs of care in digital therapeutics. We're the most clinically validated ones with published studies, and we can cover multiple GI conditions at a time. Our value proposition to health plans and employer member organizations is to produce unparalleled gut symptom relief to sufferers, improve their emotional well-being, supercharge their productivity, and ultimately lead to maximum medical cost savings. So today we offer two opportunities, one to partner with us to trial with your members with GI conditions, our virtual care services and digital therapies, trialing with 200 to 300 members and proving both the clinical results as well as the cost savings. And the second opportunity is for investment. We are raising a 4 million seed round to continue our product development and commercialization efforts in the United States. Hopefully all of that sounded interesting. Thanks very much for your attention and look forward to connecting further.
Awesome. Thank you to the team at Bold Health. And next up, InterGen Data. InterGen Data has built technology that can predict up to 93 of the different health and wealth life events of your clients.
My name is Robert Kirk, and I am the founder and CEO of InterGen Data. In business, intel is everything and data is king. For example, today's clients expect all companies to provide an Amazon-like experience with the simple push of a button. Now, anyone who provides advice knows how difficult this is. First, it's really hard to find and get new customers. Second, it's even more difficult to keep them. However, we have built technology that can predict the health and wealth life events that your clients are likely to go through. Our data will show what's likely to happen, when it could occur, and how much it could cost them. Today, we can predict 93 different events, and we expose this data via API to you so that you can use it as you see fit. In other words, by using our data, you will be able to connect with your clients in a much deeper and more meaningful way. So, to put this all in context, I'm going to walk you through a recent POC that we did with a large global carrier, one that provides benefits to a US-based employer. They had 1,234 employees, and they wanted to see if they were offering the right products and if they could increase participation. So we took in an anonymized client file, ran it against our engine, and guess what? Over the course of the next 5 to 10 years, we were predicting a shortfall in coverage of a little over $20 million. Let that sink in for a second. We were able to uncover a specific and major shortfall between the expenses that their employees would likely have compared to the insurance coverage that they had today. This means that by using our data, we were able to specifically tell them who to speak to, and that resulted in a 9.3% opportunity in their existing client. If you extrapolate that across 10 million customers in your insurance base, then you're looking at a $2.5 billion opportunity. What's even better is if that the last year has taught us anything, it's the fact that our customers want to know how their health costs are going to impact their financial journey. Well, in response to this, we have just built the first version of a chatbot that will use our data to provide employees with a hyper-personalized recommendation, specifically to what they should be purchasing and how much. Simply put, this means that with our data, you can grow your top line, increase engagement, mitigate customer attrition, and improve profitability while providing your clients with the right product at the right time. And this leads us to an exciting opportunity. As of today, we are a seed stage company that's in the middle of a $2 million capital raise. We have soft commitments of $1 million, and we've just closed our first customer. What's really interesting is the fact that he is our original angel, and he's now doubled his position to $500,000. And we, by doing business with him, will recognize a little over $110K in revenue. Now, part of this money is going to be used to increase our predictive capabilities. And we're looking to add financial data that includes 150 million households, 200 million adults, as well as EMR and claims data that covers 7.4 billion claims. We're also negotiating with some social media and behavioral science firms to be able to help companies like yourselves better know how to communicate and help lead your customers through these events and to make the right decisions. So if you're interested in seeing how our data can help you, or if you'd like to take one of the last remaining slots in our raise, then please contact me via email or just give me a call directly. Thank you and have a blessed day.
Wonderful, and some really exciting stuff for Robert and the team on the horizon, and I know he'd love to tell you more. Next up, we have Carefull, financial tools for living long.
Hi, I'm Todd Roback, founder at Carefull. Excited to share Carefull here and some of the progress over the last few months. But first, a reminder of what Carefull is. There are 45 million people in the US who are responsible for the financial well-being of an aging loved one. They are financial caregivers. We are the first financial platform for these 45 million people who we believe are deeply underserved. It's them and their 190 billion of annual spend. So as a reminder, what is financial caregiving? Think of it as coordination, contribution, and oversight, right? A big set of activities. It's a ton of things. Monitoring other people's accounts for fraud, ensuring bills are paid on time, setting budgets, calling banks and disputing or resolving an issue, collecting funds often from siblings and commingling those funds, which is a terrible idea. It's 100 daily tasks, it's time and emotion. And today, this person who has kids and a job is left alone to cobble together a system to do this herself. And underneath these activities, you have 50 billion of fraud annually. That's the stuff we hear about, elder fraud from the outside, but it's also the stuff you don't hear about, the bad things that come from within the trusted circle, sibling, bad actor, an adult child who feels entitled. All this to say nothing of actual mistakes people make as they age. Remember here that Johns Hopkins in November concluded that dementia can first be diagnosed in the wallet up to 6 years before it can be diagnosed in the doctor's office. Financial mistakes, credit score hits, late payments. So all of this happens within the context of 24 trillion of impending wealth transfer. So we're talking about multi-generational finance here and bridging that gap. And I think most importantly, we're talking about a financial relationship that's between 2 and 20 years, okay? So it's a really long time to add value. So that's a reminder of what Carefull is, a reminder of where we are today. It's a platform for customers and advisors to do 3 things. First is a body of what we call caregiving monitoring, big machine learning engine that looks for things that banks don't look for today. Duplicate payments, missed payments, increases in a paying window, cash usage, financial caregiving stuff. We look for charitable contributions. We look for low spending. Transfers are things that look suspicious, strange behaviors, and just know this is customized for each person. You don't go in and set limits and rules. Within minutes, we can look back months and see what normal looks like for one person. So that's what we mean by personalized, big smart engine underneath. That's the first. The second, we facilitate communication between financial caregiving adults, loved one, advisors, and anyone else, so they all see the same thing. And then third, we teach and educate about what to do next. We've written the roadmaps, the tools, and the content, when to get power of attorney, all those things. So that's what it is. Some progress. First on product, really pleased to see credit monitoring rolling out in the next few days. It's something customers are asking for, so that's great. A bigger thing is right here. Thanks to requests of our partners, the advisor dashboard is something that we're working toward and are built around letting advisors have these new and impactful conversations. So a dashboard for advisors to retain the assets they have, bridge the gap to new generations, attract new assets, as well as preventing fraud, offering new products, etc. So you can see here the ability to see all your clients at once, almost a heat map of your clients and their issues. Here's what we call a family tree. So you can see the other family members who may not yet be clients. You can see who's helping out. And then finally, what we're calling an opportunities tab tees up a next best conversation to have with content. For example, a decrease, let's say, or an increase in the decumulation rate, or a pattern of missed payments, something you may want to check into. A double click here might suggest products, resources, talking points to use with the client. So really excited there.
The advisor dashboard has been a big thing that's come out of the last few months, and our work with some partners, which leads us to finally thrilled to say we have some pilots in pretty advanced stages, which is new with both insurance and wealth advisors. Some are pretty light. We stand up a financial caregiving page, offer the Carefull product, but under the partner's brand, offer the content and the tools. And some on the other side are much more advisor focused, testing how advisors and whether they use it, how they use the tools in the dashboard that you just saw. The pilots are not deep integrations. We stand up something together, we watch people use it, and we see how we can play across those generations in the 24 trillion of wealth transfer, all while we pump content into it like you're seeing here. So that's a lot for 4 minutes. Hope to get a chance to discuss it with you. Thanks for the time.
Awesome updates, Todd. Thanks so much for sharing. And next up, we have Spyglaz. Spyglaz is a platform for proactive customer retention serving the insurance and asset management industries.
Welcome to Spyglaz, a platform for proactive customer retention serving the insurance industry. You may have heard that getting a new customer can cost you a lot more money than keeping an existing one. The insurance industry has the highest customer acquisition costs of any industry. Yet insurers lose hundreds of millions in lapsed policies and lost opportunities to keep and grow their customer base. Spyglaz gets the right message to the right customer at that optimal point of influence during live customer conversations. First, we analyze your historical customer data and identify factors that have historically led to customer loss, as well as individual propensity for cross-sell and upsell. We then use that intelligence to deliver future predictions, such as high-value customers at risk and products most likely to be purchased. The insights are integrated into customer contact software. During live customer conversations, the rep can instantly get a heads up on the best message for a positive outcome. Here, you can see the Spyglaz user experience in call center software. We create a link with a unique customer ID and place it directly within the call workflow. Adding this link is a fast and secure process, requiring minimal effort for the insurer. When a call comes in, the customer service rep clicks on the link and instantly sees what we call a policyholder snapshot. This snapshot delivers simple yet powerful conversational prompts that the rep can scan in seconds. In this example, the rep knows that this is a high-value customer at risk, that retention action is required, and which products to cross-sell. We understand that customer service reps have just a few seconds to absorb new information before engaging with the customer. So we keep it simple and only present the critical few insights needed to take effective action. You're probably thinking, what type of data and how much do they need to make this work? We typically work with a few years of historical customer data. This includes personally non-identifiable product, demographic, distributor, processing, and customer interaction data. Customer interaction data, such as call reasons, frequency of calls, and emails, have high predictive relevance for future customer behavior, and we consider this an important input for our process. We'll take the data in any format that works for the insurer from any standard data storage repository. These files are updated by the insurer whenever new data is available. An automated Spyglaz script detects new data, pulls it into our platform, runs our machine learning algorithms on the dataset, outputs insights, and then stores it securely in our Microsoft Azure database. Spyglaz is easily adopted. Low cost, fast integration, and no impact to legacy systems. Training needed for call center staff is minimal, and we assign dedicated resources to ensure program success for the duration of the contract. We provide comprehensive support to ensure program success and positive results. This includes analytics, unlimited technical support, and a dedicated customer success manager to track milestones and resolve issues. Spyglaz empowers call center reps to have better conversations and brings the focus back to your most valuable assets, your customers. Spyglaz is proud to be a part of Plug and Play's Silicon Valley Accelerator Insurtech Batch 10. Thank you, Plug and Play, for accelerating our growth. And thank you to your great team for the learning, support, and valuable connections that we gained through this exceptional program.
Thank you, Spyglaz, and be sure to reach out to Nirja and the team today on Attendify. Next up, we have Pilotbird. Pilotbird brings the power of lifestyle analytics to insurance.
Hi there, my name is Evgeny Alexandrov. I'm founder and CEO of Pilotbird. At Pilotbird, we bring the power of lifestyle analytics to insurance. In this quick video, I'll give you an update on the progress that we made over the last 3 months as part of Plug and Play 2021. At Pilotbird, we use social data points. Our solutions tend to focus on risk scoring for underwriting, group underwriting, as well as fraud detection. The use cases that we have is to detect certain lifestyle choices that impact insurance decision. So for example, we can detect smoking habits, scuba diving, skydiving activity, body mass index, as well as healthy lifestyle choices. All of this has proven to eliminate top quintile of risk for group business underwriting that we worked with so far. Over the last 3 months, we secured yet another pilot with Fortune 500 carrier. This is yet another number of carriers that we worked with. All pilots that we've created so far has exceeded the success threshold that we established in the beginning of the pilot. So this is very promising. The problem that we started to solve at Pilotbird is that group underwriting and fraud detection is still stuck in the 20th century. Carriers rely on 600-page manuals with very crude risk factors. We believe there's a better way to do this. We've created technology that consumes public available data on employees and individual members to create segmentation, and we use this segmentation in 2 distinct approaches. First one for group risk scoring, where we detect, for example, high smoking rate or BMI index among the employees, but also flag any inconsistencies for claim processing. For example, somebody enjoys playing golf, but in the same time claims disability, and we would flag that to the carrier, our partner carrier. We built a web portal that helps not only consume our risk score, but also improve underwriters' workflow and save them time. I can give you a quick glimpse of what the portal looks like. Here we specify a group number. We can use as an example plug and play for group business. And again, this is a dummy data. We provide plan design. We have multiple classes, accommodation, different plan styles. Here we choose that is % of salary, 100% of salary, up to 250K. We also have a age reduction schedule adjustments. Here the underwriter would upload census. And this is a dummy census for plug and play. We flag any errors or gaps in the census that the underwriter can make adjustments for. Fill in any data point right on the spot, and then export the data as necessary for the follow-on processing. They can even provide direct input for the benefits that the specific employee would receive. We can click and submit here, and then we give a time estimate when the data will be available. Results will be available usually within 2 to 5 minutes. We provide indication who submitted it, so underwriters can work in teams to complete quotes as necessary. We also have a solution for the fraud using the same portal. Our pilots tend to be quite simple or involved depending on the carrier's appetite, and we can tailor a specific pilot through our conversations. We price our pilots as based on the impact to the business, and we measure our ROI not in percentages but in times. This has been a brief overview of the recent progress at Pilotbird, where we bring the power of lifestyle analytics. Welcome to reach out to me at Evgeny@pilotbird.com, or stop by our booth where myself or my team member will help explain it and identify whether we have a use case to work together. Thank you.
Thank you. And that was Evgeny with Pilotbird. Next up, we have Second Nature. Second Nature helps people lose weight and change their habits sustainably for good.
Hi, I'm Mark Davis and we're Second Nature, experts in sustainable digital lifestyle change. And we're on a mission to use the science of habit change to make healthy living second nature. To date, we've helped over 40,000 individuals change their lives. And excitingly, since I last presented, we've actually launched officially in the US. So let's first address the two key problem areas that we'll talk about today. So retaining healthy customers is actually a real challenge because you don't have frequent opportunities to positively engage with them. And then on the flip side, your customers that are living with obesity represent a large cost and risk burden for a range of long-term conditions. It's a real struggle developing services that cater for both of these audiences. So to address these challenges, we provide sustained engagement with your customers to build your customer retention, proven health outcomes that impact claims, and the ability to enrich your understanding of your users with our valuable health data. But before we jump into the value we provide, let's first have a look at the core components of our product. You can summarize Second Nature into three distinct elements to achieve sustained behavior change: track, support, and learn. So let's first look at track. Users are able to track their weight, steps, sleep, and habits in real time, utilizing our connected tracking technology. They're able to track their progress on a daily basis, which builds a really strong positive reinforcement cycle that motivates them to stick to the changes they've made. The personalization and sustainability of our program is made possible with the one-to-one support that every user receives from a qualified health coach. Our coaching model is unique, providing continuous support without the need for an appointment. Our health coaches transform our users' physical, mental, and social well-being every single day. The Learn element of our program provides the educational backbone to our product. Users have access to daily educational articles, a huge recipe library, exercise videos for all abilities, and other features to become well-being experts themselves. I mentioned three core components, but there's a secret addition called Sustain. This is where completers graduate to after the initial 12 weeks. It's entirely focused on embedding the changes an individual has made, providing additional content that is further supported by our community of health coaches. Users never lose access to Sustain because we don't ever want a user to slide back into their old habits. So how is our program valuable to you? Firstly, our ability to engage with users is market leading. 43% of users are still using our program even after 3 years, significantly higher than all of our competitors. If we partnered with you, we could translate our sustained engagement into increased customer retention for your organization. Secondly, we have market-leading long-term weight loss outcomes. Users see results really quickly, typically within a fortnight, and then they maintain that for at least 2 years. Sustained weight reduction leads to significant claims reductions for a wide range of costly ailments, including diabetes and cancer. Lastly, the data we are capable of providing can enrich your understanding of your users. The rich data that we're gathering on a continual basis can improve your ability to market your insurance products to high-value customers. You can underwrite more accurately, and you can even understand how and when certain customer groups churn. This will help us learn when we can intervene and maximize the retention on your customers. We come to the table with experience working with insurers like yourself. Since I last spoke, we were running a pilot with Vitality. We are now successfully a full health partner with Vitality in the UK, providing our service to enable their users to engage in their health for the long term and boost retention. As I mentioned at the beginning, we've now officially launched in the US, so we're looking for our first partner to make healthy living second nature stateside. So to close, it goes without saying that we'd love to partner. We'd suggest that a pilot cohort of roughly 250 users willing to improve their health. By the end of the 6 months, we'll have a good idea of how our program has impacted your customer retention. By 12 months, we'll have an excellent idea. Thank you, and hopefully we'll hear from you soon.
Thank you, Mark. And next up, Nayya Health. Nayya Health generates the insights needed to optimize health networks and improve the patient journey, leveraging connected data and machine learning.
Hi, everyone. I'm so happy to be here to talk with you about Nayya today. My name is Chanel Sovine. Nayya just completed our Series B funding round just 2 weeks ago, securing $37 million, led by Silicon Valley Bank and Iconic Growth. And we're really excited about this great milestone in the company's history. Really, what Nayya is here to do is help consumers choose and use their benefits in a way that ultimately will become how the future of healthcare really functions and operates. And what we found is that many of the companies you see here, like Amazon, Mint.com, are doing something exceptionally well, which is the ability to take consumer information that is out in the world and use it to personalize a consumer's experience when interacting with their software. So Mint.com, when they send me an email to let me know that I can save money on my car insurance, I'm compelled to log in and really determine what that means for me, because it's truly personalized to my situation. But oddly enough, even though our benefits decisions are one of the most important decisions we'll make about our company's health and well-being, we're still kind of right here today in the world of benefits. We haven't achieved that same level of true personalization, and benefits continue to remain kind of mystifying and very challenging for the majority of consumers. And that's really the challenge that Nayya is here to take on. And we've set out to change the way that consumers choose and use their benefits every day, so that they can really have peace and confidence. We're doing that by taking all of the data points that are out there in the world and knitting and weaving them together in a way that is insightful for a consumer. This is something that no other company today is doing. We've integrated with 90% of the world's insurance carriers, and we've also added on top of that an additional 3 billion rows of external data points to overall personalize the experience and have our artificial intelligence engine really ingest data in a way that makes sense to a consumer. We take security very seriously, and we are SOC 2 and HIPAA compliant, and we can be up and running within 30 days with almost no employer lift, which is very significant in this space. The types of data that we're looking at here are ingesting not only health and insurance claims related data, but also pharmacy data, behavioral and geospatial data, so down to the zip +4 for what's happening in the area where an employee lives and resides. And then very importantly, we're incorporating financial wellness data into our recommendations and our experience. We're driving significant savings, $1,200 on average per year for each consumer, and bringing a significant ROI to our employer customers as well. And really, we're able to do this in a way that's flexible and customized. We can be embedded within an existing HR or benefits administration platform, or we can work independently. We are one company with 2 products, and our first product is Choose, where we're really taking that data and making impactful, insightful recommendations to help employees choose their benefits. And then secondarily, this is really where the real magic happens, is our second product, Use, which is the year-round tool that is helping employees 365 days a year, proactively nudging them and helping them to save money. A great example you see here is this employee can save $123 on prescriptions really by interacting with our solution, and we'll be providing those proactive nudges to them throughout the year. So we're really excited to share Nayya and bring it to the world, and thank you so much for your time today.
Huge congrats to the Nayya team. Thanks so much. And next up, Walnut. Walnut turns life insurance into a premium membership that can be embedded in consumer products being distributed at scale.
Hi, everyone. My name is Adrian, one of the co-founders of Walnut, and I'm here to tell you a bit about what we're building. Have you ever woken up in the morning and thought, I'd love to buy life insurance today? Well, neither have we, and neither has almost half of the US adult population. Over 96 million adult Americans don't carry any form of life insurance, and over half of the ones that do have it tied directly to their increasingly transient employment. This puts countless families at risk of financial burden. Now, there are 3 core reasons why there's such a large coverage gap. 1, product. Life insurance hasn't changed for hundreds of years. Young individuals think it's 5 times more expensive than it actually is, and there's no daily value associated with the product. It simply sits on your shelf after you purchase it. Number 2, distribution. Over 95% of life insurance is sold by physical agents and brokers who don't have financial incentive to sell smaller policies to underserved groups. And if they do, they're commonly overselling. And number 3, technology. Much like banking infrastructure was 5 years behind the curve, insurance is 5 years behind banking, leading to a lack of new distribution channels. To ensure this coverage gap doesn't continue to grow, we're transforming life insurance and making it embeddable in products and services that consumers use each and every day. To do this, we've done 2 important things. First, we've turned life insurance into a premium membership. Simple plans, instant coverage, and member benefits from brands that consumers love. Our bundle of relevant products is designed to support a member's holistic needs each and every day. Headspace for mental health, sleep, and focus guidance, ClassPass for physical fitness and in-person class discounts, and Dashlane for digital security and password management as consumer behaviors shift more and more online. The second thing that we've done is build out the Stripe for life insurance. We're integrated with carriers and are enabling our membership to be distributed in any platform or business via API. And for the low-tech businesses, we've developed no-code solutions as well. In just 6 months, here's what we've achieved. We have 4 key carriers, 2 in the US and 2 in Canada. We've created an API that enables any business to distribute our life insurance membership. We've proven that businesses in fintech, mobility, parenting, P&C, and financial services are looking at life insurance as a way to transform their business models, decrease churn, and build deeper relationships. And not to mention, we're fully live with a digital term life product in the US. Our small but mighty team has been building meaningful partnerships with carriers, consumer brands, and innovative distribution partners, all with the goal of creating infrastructure that will enable the mass distribution of life insurance across whole populations. Our vision is to ensure that every individual has a baseline level of life insurance coverage with the goal of building trust and growing with them over time. To continue this mission, we're raising $8 million. With the money, we'll be building our sales team to focus on distribution in each vertical, scaling our development team to provide a self-serve Stripe-like API experience, and we'll be developing IP to fundamentally change the claims experience to create trusting consumer relationships. And here's a bit about us. Our founding team has helped distribute health and financial products at scale and has been integral in the creation of businesses valued north of $100 million. After working together at RBC, a top 5 North American bank, we're out to change how life insurance is distributed. The blue ocean of embedded life insurance is still in its infancy, and we couldn't be more excited about our mission to positively impact millions of individuals and help them live their best lives. Thank you.
Wonderful team with Adrian and Walnut. So please be sure to get in touch via Attendify or email if you'd like to connect more. At least we have Unum ID. Instantly know who you're dealing with online.
This is me logging into the Acme website using Acme's mobile app. Painless multi-factor authentication in a fraction of a second with no password. Modern enterprises manage thousands of employees, millions of users, and billions of transactions across dozens of geographies. Regulations and business needs force them to collect vast amounts of sensitive personal data and store it in central databases. But data breaches are up nearly 300% year over year, and 4 of 5 of them are caused by compromised passwords, which attackers obtain through social engineering attacks like SIM swapping and phishing. This is a club you don't want to join. The COVID-19 pandemic has dramatically worsened these problems. Users are interacting with companies online more than ever before. And yet today, authentication is a disaster. Unum ID has a solution. The end of, I better not tell you my password. Painless multi-factor authentication with no shared secrets. You just add our software to your mobile app and it works behind the scenes on top of your existing infrastructure. To log in, the user simply uses their phone and passes a biometric check. In the background, Unum ID uses asymmetric cryptography tied to the secure hardware of the user's phone. There's really nothing an attacker can do. Phishing doesn't work because there's nothing to phish, no password or other shared secret. Even better, the authentication is bidirectional. You authenticate the user, and the user also authenticates you. SIM swapping fails too. The user's identity is tied to their physical phone, not their phone number. So redirecting their phone number doesn't do anything. It's the convenience of Face ID everywhere, with even higher security, and it works for both users and employees across all of their devices and workstations. It even works on support calls and in person. Your kids don't know what floppy disks are. Their kids won't know what passwords are. As a data-driven modern enterprise, you're sitting on a gold mine, not just of money, but of verified personal data. Everyone wants it, both bad actors and other companies who need faster user onboarding. We just showed you how Unum ID helps you protect the gold from theft through passwordless authentication. Now we'll show you how Unum ID lets you put the gold to use. We call it shareified identity. Digital identity today is a mess. IAM systems are siloed, Active and Active Directory instances often don't talk to each other, leading to fragmented user and employee accounts. Verifying identity online is expensive, slow, and very prone to fraud, which leads to low account opening rates and churn. And especially with COVID-19, large enterprises are being outcompeted by small startups with mobile-first solutions. Unum ID transforms your mobile app into a virtual ID card. It securely stores a person's identity data and lets them instantly share it across business units, partners, and beyond. It's a single source of truth for who a user or employee is. Let's see this in action. To create an account with this fintech company, Hooli, normally I'd have to go through manual data entry and a KYC verification process that would take anywhere from 10 minutes to several days. But with Unum ID, I can create an account instantly. I just click Verify with Acme and pass a biometric check in the Acme app. This has all of the security benefits of passwordless authentication we showed you before, but now I'm sharing much richer data, in this case, a full KYC verification. It's like login with Google and login with Facebook. A user would never delete their Google account because it's the access point for so many of the services they use. With Unum ID, you can put Verify with your company buttons all over the web with complete control over where your users can and can't share their data. Importantly, each user stores their own data on their device. The data is only shared with their full consent, and Unum ID never has access to it. We built Unum ID for a GDPR world. Unum ID makes you essential far beyond your niche. It puts your goldmine of verified personal data to use. I founded Unum ID with my brother Aiden while both of us were at Stanford. We left to build this company because we believe digital identity will unlock a vast new wave of transformation. We have an amazing group of advisors, and we're backed by Samsung, Draper Associates, Stanford professors, Franklin Templeton, and many more. What could you do with Unum ID? Join us. Shareified identity is the future.
Awesome stuff at Unum ID. Thank you so much to all of our startup presenters. But before we send you out to go meet and hopefully chat with them, we have some quick awards that we'd love to share with you. So it's my great pleasure to announce our Corporate Innovation Award winner. It's Farmers Insurance. Over the last few months of our Batch 10 program, Farmers has been incredible in utilizing deal flows, engaging their business units, and attending various events. So leading into their acceptance, we're going to hear from my teammates, Stephen Fay and Norjeet Sidhu. Both have been major players in guiding our growth and relationship with farmers, ensuring our success is their success. So from Stephen and Norjeet.
Big shout out to Farmers Insurance for winning this year's Innovation Award, and big shout out in particular to Rehan and his team for all the great work he's done through the pandemic. I think what's been really inspiring and encouraging for me personally, just through the history of our relationship, is just seeing how active they've been over the last year and a half across a number of topics like smart home, digital transformation within auto. So just big shout out to the group and looking forward to continuing to work together.
Yeah, and just to add, it's been great working with the farmers team, especially Rayhan and the group for the past 4+ years. We spent a lot of time going over a lot of projects and seeing a lot of cool things really come to market. So congratulations, you guys deserve this award and look forward to many more years to come. Great work.
Hi, this is Rehan Ashraf. I'm the director of the Innovation Lab here at Farmers Insurance, and I'm thrilled and honored that Farmers is receiving the Innovation Award this year from Plug and Play. 2020 has been a difficult year for all of us. However, if there was a silver lining to take from this, I would say that being virtual really allowed more people to get exposed to Plug and Play since everything was virtual. And that really helped drive a lot of engagement and interest from our end. And together with the great partnership from the team with Stephen, Ben, and Nurjit, we were really able to push the needle a lot this year, despite of all the challenges. So again, I just want to say a huge thank you to all of them, to the team, and to my team here at Farmers. Super thrilled and looking forward to what we can achieve together in the future as well. Thank you.
Absolutely, could not agree more. So congratulations again to Rayhan and the Farmers Insurance team. But speaking of innovative teams, it's a personal honor of mine to present the winner of our Startup Innovation Award to the incredible team and cutting edge technology that is Spyglaz. As a quick recap, Spyglaz is a platform for proactive customer retention serving the insurance industry. Spyglaz enables better live customer conversations by using machine learning to predict future customer loss when retention action is required and propensity for cross-sell. These insights are presented as simple yet powerful conversational prompts during live conversations, and they are all easily integrated into existing call center software, CRM, or any other platform being used to manage customer conversations. Spyglaz gives customer-facing teams targeted opportunities to proactively retain customers and grow revenue, all within existing workflows. So Nayya and the team have been exemplary over the last few months, participating in office hours, webinars, and workshops. And I'm personally really thrilled to continue the work together. So we're going to hear a few words now from CEO Nayya.
Thank you so much, Rachel. We are absolutely honored and delighted to be accepting this award today. Making it into Plug and Play's Insurtech Batch 10 was a very big deal for us, and it has just been an extraordinary experience. It's opened up a lot of doors that did not exist before, and just the connections and the networking has been absolutely amazing. I think one of the most valuable things for us has been access to the corporate partners at Plug and Play, and we have some great conversations happening and an expanded pipeline as a result of those introductions. And I also want to say that just because the Plug and Play ecosystem is so large and so dynamic and diverse, there's a couple sort of unexpected things that came out of it. So one is we were anticipating some direct introductions, but we got some indirect introductions. So your Society of Actuaries, the office hours, that just ended up being one of the best things that ever happened to us. We were able to connect with some really senior level industry leaders, veterans in the actuarial field, and those connections then led to more introductions to, at the C-suite, at the CEO level, at some major insurance companies. So that has just been an absolutely extraordinary byproduct of those office hours. And then, and the other thing that I think has been really valuable is we're Insurtech, but we're also fintech. So our immediate focus is the insurance industry, but we also have a use case for the asset management industry. And again, through your network, we were able to connect with the person, one of your partnership managers for the fintech asset management space and make that connection as well. So thank you so much, for everything you guys have done. You personally, everybody I've spoken to at Plug and Play that's facilitated this program has been just so wonderful to work with and so supportive and so much wanting to see the startups, thrive and prosper and sort of get to that next step. So thank you for the award and thank you for this wonderful experience.
You will definitely want to keep your eye on Spyglaz. Thank you for everything and congratulations to Farmers Insurance and to Spyglaz today. But with that, that wraps up our Insurtech Batch 10 Expo here. We're so grateful for your support and attention. Massive thank you to our speakers, Nigel, Walsh, and Saeed, Amidi. And of course, a huge thank you and congratulations to our Insurtech startups for all of their hard work over the last few months. Our Attendify platform will be open through the rest of the afternoon, so we highly encourage you to network and chat with today's startups, but you'll also be able to access the platform over the next few weeks to check back on any pitches you might have missed or any meeting requests. So please let us know where we can support you in connecting with today's startups. As always, we're committed to growing and innovating alongside all of you, our partners. So please let us know what you think, what you'd like to see. We're always expanding our insurance and financial services programs. We're actually headed to Chicago next. So reach out to myself, the team, or Stephen Fay for more information and where you can get involved. We're always looking for new opportunities to team up. So please reach out. But with that, on behalf of the entire Silicon Valley Insurtech team, thank you for joining us and we look forward to seeing you soon. Bye-bye.